comes to European corporates and things that might have been overly sold as a result of, well, before the French crisis, we were talking, or in amongst the French crisis, we were talking about US politics and what that does, the tariff story, for example. Are you looking for European companies that have exposure to the US and to that growth story there, and crucially produce in the US and therefore are less likely to attract the ire of an incoming president? Are you looking for those particular names?
Companies? And look, you can find lots of them. We do like those, yes. So, you know, we have a basket of companies, US exposure basket. The companies in that basket, they have almost 60% of their sales in the US. Which sounds like bad news, because if they're selling to the US and there's going to be a load of tariffs lumped on, that doesn't sound particularly good. But they generally just own US businesses. They have US employees, US assets, and US sales. So in a way, they're US businesses embedded in the European stock market. Now, they do trade at a valuation premium to the European stock market, which I'd expect, given better US growth, you know, not such a chance of higher taxes in Europe, in the US, etc. But they trade at a big discount to the US market, where their exposure is.
It does make you wonder whether they just see I'm going to go and relist.
In the United States, and have that valuation of the US pull up the rest of their European business. I don't know if that's not.
I mean, and we have lost some companies out of that particular basket because they have relisted over time. This basket is in some ways a right basket for companies that might consider that. But there are other routes as well to closing this valuation gap. I mean, performance will be one of them, and they have outperformed recently, which is helpful. Also M&A, so US companies buying, or and you've seen an element of that. There's private bids for these types of companies as well. So there are other ways of closing the gaps.
One thing I was looking at over the weekend was, and I appreciate this is more of a US exceptionalism story than the European narrative, Sharon, but I was looking at I think it was SocGen putting out some research talking about how in Japan in the 1980s everything looked exceptional and nobody expected that exceptionalism to end, and yet it does end.
It did, yeah.
It really did, and it does end. And I mean, I'm not saying there are direct parallels, but is the team thinking about the US exceptionalism in that way in any sense, or you just see it continuing?
Look, for this next year, yes, in the sense that we are overweight, the US and our sort of recommended asset allocation relative to places like Europe. But the valuation gap is huge at the moment between the US and Europe. A lot of its exceptionalism is already embedded in the price. And over the more medium term, my colleague David Coston, our US strategist, published saying that he thinks that returns on the S&P will be quite low in the medium term. 10-year return of 3% per annum. Not a huge bear market for the US, but something which is pretty low return, given the fact that you're embedding a lot of its future growth already in the current valuation.
So that's a long-term view on the S&P in terms of what you could see in terms of equity performance. In the near term, is there a case to be made that maybe you want to be betting on slightly better earnings as orders are pulled through and pulled forward in anticipation of tariffs? Could you be looking at slightly better Q1, Q2 on that order story? Yeah,
it might be, and it's a little bit of that maybe, or maybe some inflection in China as you get people's view that stimulus will help there. You may see a little bit of that, but the momentum in the economic data in Europe has still remained very, very weak. We had PMIs the week before last, and they were soft again. So my view is it's not completely obvious that you will see a big turn in economic data in the near term.
You have a buy British call in your note to us. Yeah. What is the underpinning
What's
to
the
that
underpinning
view?
of that? It is in the context of Europe. So we are looking for Europe to underperform or underweight Europe, but within the context of Europe, we do like the UK. And the reason we like the UK is we believe the UK is exceptionally good value, and you can find a lot of these companies with huge amounts of international exposure in the UK with lots of dollar earnings. And we're expecting the dollar to remain reasonably strong. So given that, we quite like the UK. It's cheap. It's underpositioned in, it's got a lot of international earnings. Also, the economic data in the UK, I mean, it's been mixed recently. Some of the sentiment data has been weaker, but we think growth in the UK will be better next year than in Euro area.
Okay. Sharon, thank you very much indeed. Sharon Bell joining us from Goldman Sachs, equity strategist. Let's talk a little bit about what is happening at the Core 6. I want to flag an error that I've certainly made and we may have made. LVMH is under a little bit of pressure this morning. Anna just flagging out, I think probably with the assistance of various other...
A teammate and a viewer.
Yes, emailing in. LVMH has gone XD this morning, which is why we're seeing that stock maybe under as much pressure as it is. relative to a French market that is down as well. But that's one of the reasons why you're seeing some of the losses maybe being greater, it appears, on the French market than maybe you would have thought, and why we're seeing the breadth of the losses maybe we are seeing in France. But nevertheless, the French market is under pressure. You are certainly seeing the auto sector firmly under pressure. Even Ferrari is giving back a little bit of ground this morning. But elsewhere, ASML is down. You've got Schneider down 1.36% as well. But some of the safety plays, look at that, the defensives in the form of the pharmaceuticals and Nestle doing a little bit better this morning in terms of their performance. But thank you for keeping us honest. We may have missed that one. Ex-dividends that don't come on a Thursday always confuse me.
Yeah, very annoying.
To be brutally honest. I can't check all of them. And I do get a list, and maybe I don't always check the list as carefully as maybe I should. But LVMH is a big one to have missed. Let's talk about some of the details we're watching elsewhere. Joe Easton is here with those.
So Stellantis is one of the big decliners in the auto space, Guy. You mentioned the auto weakness. Stellantis coming down the most since September, following surprise news of the CEO stepping down. Now, Morgan Stanley analyst writing in a note that he was really well liked given his turnaround efforts and cost cutting. So it is a surprise for them, and they expected it to be taken negatively by the market, and that's what we're seeing. It was down around 7 or 8%, actually went into a halt, now down 5% for that one. Then in terms of the French lenders, we're seeing a lot of the losses concentrated in the French financials today. SocGen, Credit Ag and BNP all slipping around 1.4%. Strategists over at Otto writing that actually the uncertainty around the French budget probably not priced in yet. They're predicting 5% downside potentially in the CAC 40. Then in terms of Delivery Hero, an interesting one out of them, they are saying they're going to make all of their drivers in Spain, their Spanish unit Glovo, they are going to become employees rather than contractors, and they reckon that's going to cut their profit by around 100 million euros for the year. According to them, that's breaking on the terminal. A bit of a profit warning for that one. In terms of rating changes, we've got a decent one for Novo Nordisk. Now, Exane likes the CagriSema data. They reckon that that could be a potential boost. We're waiting for that to come out over the next few weeks. It's the big new obesity drug for them. Exane reckons that will boost the stock on that one. In luxury, Swatch is downgraded to underweight over at JP Morgan alongside Kering. They've got a big note on the sector looking ahead to 2025 and don't see a turnaround at the watchmaker for a while, so that one's slipping at the moment. But there's also a contrarian call on Burberry, a bit of positivity. Finally, Deutsche Bank reckons that Burberry could be about to rebound following a 50% decline this year. It's the first time they've had a buy rating on that stock, according to our data, and Burberry edging very slightly higher this morning in London.
Joe, thank you very much. Joe Easton from our equities team with an update on all of those stocks this morning. We need to tell you what is going on with Stellantis. We'll do that shortly. Shares under pressure after the CEO stepped down. The stock is down by 6.5% this hour. They've not changed the guidance, but the uncertainty at the top is enough to drop the shares yet again this morning. More on the auto sector coming up. This is Bloomberg.
Is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space. That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching The Close.
Welcome to Balance of Power.
This is Bloomberg.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Keely Lines deliver news, insight, and analysis live 2 times a day every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Nearly 17 minutes into the new session, new month, new P&L, same stories, I would argue. The French market firmly in focus this morning, being dragged down by French politics, Stellantis and LVMH and Christian Dior going ex-dividend, which we missed earlier, so I'm just going to keep repeating the fact that we missed it. But that seems to be the basic story this morning that is driving the European narrative. Let's turn to one of those 2 stories in a bit more detail. The CEO of Stellantis, Carlos Tavares, has resigned. Did he resign? Was he pushed? Probably resigned, but with some pressure. A dispute over the board about how to reverse the weakening sales story, the stock slump that we've been seeing. Over in Germany, there's also issues. Workers at Volkswagen set to go on strike after talks between union leaders and management broke down. To track both of these stories, we turned this morning to Ollie Crook, who joins us from Berlin. Let's start with Stellantis. The European crisis has claimed its first major CEO. This is the 4th biggest car company in the world. Talk to us about how this came about. This felt like a sort of slow-burning fuse that seems to have accelerated a little bit over the last few days.
Yeah, Guy, it's one of those classic slowly at first and then suddenly moments for Stellantis and the CEO here, Carlos Tavares, who is now no longer, as of effective immediately, the CEO of the company. It really went very quickly from unanimous support from the board into basically creative differences, strategic differences, is what the board was talking about. And basically there's been this sense, Guy, that ever since that profit warning back in September, that sort of already began speculation about a possible replacement for Carlos Tavares. He moved really quickly back then to sort of squash those rumors. He got rid of the CFO, he got rid of the COO, he got rid of the COO for North America, replaced the brand heads for Alfa Romeo and also for Maserati. All of that very swiftly to sort of quiet those conversations. That obviously sort of resurged. We got it from John Elkann, the chairman of the company now, basically saying that they are going to find a new CEO that they hope to have in place at the beginning of next year. They had started the CEO search at the time when this sort of profit warning was sort of issued, but there has been this sort of sense that this company has been sort of staggering forward ever since that. And we should say, I mean, the shares are down again another 6-7% today. This is the worst auto performer in Europe out of all of the companies, down almost 45% this year. So really sort of a really sort of important moment here. Carlos Tavares really basically presided over this business since it came into being back in 2021 with the combination of PSA and FCA Fiat Chrysler. But so really a sort of critical moment here. We wonder sort of how much is this for more to come across this industry that's really struggling to turn it around.
Yes, and that takes us on to how much of this is a Stellantis problem. And we've heard a lot about the tense relationships between this cost-cutter CEO and the dealers and the unions over in the United States. But how much of this is a wider industry problem? Because there are very few car makers that we are not talking about struggling at this point.
Yeah, so listen, and I mean, I think that for Stellantis, what is sort of interesting about them when you sort of contrast them to many of the German automakers is what they didn't have is the China problem. Their exposure to China was a lot smaller than all of these sort of players here in Germany, whether it's BMW, Mercedes, Volkswagen. What they did have is a U.S. problem. They had this huge bloated inventory. It was just not moving off of the lots. And what Carlos Tavares was really known for, and it's funny, you talk to other executives in the industry who were observing basically what was going on at Stellantis. Some of them were really sort of with great incredulity at how much basically he had managed to cut costs through the years, really sort of gutting a lot of the brands. And as you can see on the chart there, that really served Stellantis quite well for a number of years, particularly in the beginning of this year. But that has come to roost, sort of coming down really rapidly off the back of that, and coming sort of more in line with a lot of the other car dealers. And I think that part of the issue with some of the cost cuts, some of the critics of Carlos Tavares, is that he basically sacrificed too much, and you could really feel it in the quality of the products, particularly in the United States, where they went from about 12% market share earlier last year to about 7% market share, where they're really struggling.
Yeah, that's a drop, isn't it? From 12 to 7% on the market share in the US. Look, you talk about the German automakers. There's been some cost cutting there as well, at least plans for cost cutting, and part of that could involve shuttering factories, striking then, at least strikes beginning, and this time focused on VW.
Yeah, that's right. I mean, this is going to be the first walkouts of what is probably going to be a fairly protracted process in these negotiations between the unions and the management over at Volkswagen, the Volkswagen brand. And let's remind people kind of where the starting point is for management here. They're talking about closing potentially 3 factories. We're talking about the order of potentially tens of thousands of job cuts. We've been talking about a pay freeze through 2026, 10% pay cut across the board. Basically, we've heard from the brand CEO in the past saying that there is basically no way that they see to get to the cost cuts that they require without closing some of these factories. Where we are now is the unions basically submitted their proposal to cut 1.5 billion euros worth of costs. VW said that basically doesn't go far enough, and the arithmetic isn't quite there, that they basically need to do more cuts across the board. But where we are is at the very beginning of this process. We should say these are very controlled warning strikes. These are not the kinds of strikes that we saw last year with the UAW, but this could be basically the appetizer for that if there's no progress made between these two sides.
Okay, warning strikes taking place today in some parts of that VW ecosystem. Bloomberg's Oliver Crook with the details in terms of the big lines crossing around this auto sector, with Stellantis in focus as well. Ollie, thank you. French financials, meanwhile, under pressure, as we've noticed, the banks being hit today on the back, of course, of the continued French budget tensions. Here to break down all the market reaction is Bloomberg equity reporter Julien Pontus, joins us from Paris. Julien, talk us through what is happening in the equity markets of France as investors adjust to the latest positioning around this budget. Some pretty tough lines coming through from the National Rally.
Yes, they said it would take a miracle for them not to vote the government down. So on markets, we're seeing a lot more of the same that we saw in the previous weeks. Basically, the spread between France and Germany on bonds is widening a tad. Financials are under pressure. The CAC 40 is underperforming again. And it's not an extreme reaction. It's really more of the same. But when you add up all of this, you have the CAC 40 that's down roughly 5% this year, when the Stock 600 is up 5-6%. The 10-year, the French 10-year bond is trading at the same level as Greece. There's a lot of tension today. At the moment, we're seeing more of this, so more more downside pressure. There's nothing dramatic at the moment, but I mean, given that the government could fall this week, there's more to come.
Julian, we were speaking to the head of the EBA a little bit earlier on, who described French banks as robust. How much concern is there regarding the link between OATs, the French bond market, and the French banking system? We have seen this risk in the past. Are people worried about this risk emerging again in the future, this connection between bank and sovereign?
I think you mean the doom loop, whereby the sovereign bonds can take the banks down. We're not there yet at all. I mean, in terms of panic on the bond market, it's a 3% yield. So it's still, when you look at the yield, you forget the spread with Germany, with other countries, and you just look in absolute terms. I think that at 3%, it's really not the end of the world. We're not in a position of stress. If you're an equity investor, it really doesn't look good in terms of should you invest in a French bank instead of a Spanish or an Italian bank? That's a real question. But I don't think there's a stress in the sense that, in terms of their solvability.
And Julian, where do we look to next? There are perils, there are dangers and clues that we might head towards confidence votes today, Wednesday, Friday. Could happen any day, I suppose.
Yeah. Yes. Yes, it's something in terms of volatility. A burst is expected, I guess, anytime next. You had Kevin Tose from Carmignac a bit earlier on the program. And I was speaking to him a bit earlier as he came into our bureau, and he said it's basically very difficult to be bullish, euro, bearish, French CAC 40 this week. Anything could happen in the next 72 hours. So at the moment, with the national rally, having such a tough line, saying there's a 99.99% chance that they will vote the government down. No, there's a lot of room for things to get worse. But at the moment, as we speak, it's still a bit limited. I think people are still waiting to see whether this is really, this is a game of chicken, or are we really going to a clash?
Julian, thank you very much. Thank you for joining us. Julian Ponthus in Paris for us. And interesting, going back to Sharon Bell's, echoing some of what we heard from Sharon Bell a little earlier, there might very well be opportunities, but in the very short term, the risk premium has increased and there's concern about the deficit, and so it's difficult to make that positive case right now for French stocks. You look at what happened in the UK, that was the point that she made. There were many babies thrown out with bathwaters at Brexit, but it took a long time for some of those kind of opportunities to emerge because the general market sentiment is so negative. Coming up on the programme then, Joe Biden heads to Angola. We'll focus in on the US foreign policy front. The first US president to set foot on the continent since 2015, at the tail end of his administration, of course. What does that mean for the future? We'll get an update. This is Bloomberg.
Why does this business model work? Because it's virgin space. It's never been done before, and it'll never be done again. When you step back and you look at something that's been golf through institutions, has been the way it has been for 53 years without change. In 1993, I stepped back and said, okay, this is not right. It's doing the same old Groundhog Day. Everything's the same. Players are a pass-through entity. They're not getting any equity built in their day. Once they're done playing, they're out. I thought, that's just not right. When you have to build a sustainable model, you need to have these players, these famous, the world best, the best of the best. You need to give them equity into the future. You need to give them a vision of where they need to go and how they're going to get there.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Welcome back. This is the opening trade. We are 30 minutes into today's session. European stocks are down by 0.2%. Doesn't tell the full story, though. It's what they're seeing in terms of the action in France, with the CAC Quarante lower by, as you can see, a little over 1%, with Stellantis, Renault, and a number of the banks, including SocGen, Crédit Agricole, all of the banks, in fact, in France, lower by between 2%. 8% drop is the print you're seeing on Stellantis right now. The politics of France, of course, in focus, and the anxiety around the budget. Here in the UK, though, FTSE 100 just off by 0.1% at 8,280. Now, US President Joe Biden will visit Angola in the first week of December, honouring his pledge to visit the continent of Africa just weeks, of course, before he leaves office. The trip will be Biden's only visit to Africa during his time as president, as he seeks to deepen the US commitment to the continent. Bloomberg's Africa correspondent Jennifer Dabasaja is in Luanda, the Angolan capital. Jen, what can we expect then from this visit by Biden, and why is he doing it so late in his presidency?
That's a good question, Tom. I mean, he is doing it late, but I think we should acknowledge the fact that we haven't seen a sitting U.S. president visit the sub-Saharan African region since 2015. We haven't seen a sitting U.S. president actually visit Angola. And so for this U.S. administration, they say it is a good marker, especially when you think about the end of this president's term. And he is trying to fulfill that promise that he made very early on in his administration to strengthen relations globally, including here in sub-Saharan Africa. And so this trip is very much a part of the past, as it is about what they're hoping to be the future. So the past, when I talk about that, the Angola port here was a major hub for the transatlantic slave years ago. So there's a number of those in the diaspora who are hoping that is a part of the trip. We will see some of them on the trip with President Biden, but it's also about the future. And when I talk about the future, the U.S. is calling it high impact and economic opportunities that they see for this trip. The U.S. Pledged back in 2022 to invest $55 billion into sub-Saharan Africa. They say they're 80% of the way there. Angola was the fourth biggest trading partner with the U.S. in sub-Saharan Africa in 2023. So this is important for them. But really, the main part of the show really here is the Lobito corridor. This is this railway that is very critical to transporting minerals, and we've seen the U.S. increasingly invest into this railway. We will see the president make a trip there, and when we talk about the transition, this railway is very important for it, considering the abundance of copper and cobalt that is in this area. And from the Angolan perspective, they see this potentially as an opportunity for the U.S. to say that Angola is open for business. I think we should remember that Angola left OPEC not too long ago, and they've been struggling for a while to diversify their economy away from oil. And so the president has said potentially this gives investors the clear go-ahead that they can start to invest in other parts of their economy, hopefully to see it grow. So yes, you know, this is about two different sides, bilateral relationship, but also definitely a number of people who are going to be on the ground here, hoping to get something out of this trip.
Okay, so that's why the Angolans are pleased to see the Americans. The Americans have a reason to be there. The Americans perhaps also want to get in the way of some other investment streams that have been coming into Africa in huge force over recent decades, Jen, and that's from China. How does the US wish to reshape that flow?
Yeah, I mean, Anna, I think it is no secret that Angola has been one of the major countries in sub-Saharan Africa that has been indebted to China in particular. We've seen China invest billions of dollars across sub-Saharan Africa for infrastructure. And so Angola does share a close relationship, not just with China, but also with Russia. And so when you ask the U.S. officials about what this is about, they don't say that it is about having to ask a country to choose sides, but instead what they say is giving a country choice, and hopefully then they're offering or they're giving the opportunity then to a country like Angola to demand more. And yet still, Angola still sees this as an opportunity to work with all partners, and they need that when you think about this economy. But the U.S. really does need to present an option for this country that is different than what we've seen from China. President Biden has actually criticized China's previous initiative, the Belt and Road Initiative, as calling it a debt and noose agreement. And so hopefully we see a new administration, or this administration, excuse me, rethink what a partnership and what at least lending and investment actually looks like, different than what we've seen in the past. Anna?
Jen, I'll pick it up. Thanks very much indeed. Jennifer Sabazaja joining us from Angola as we await the arrival of President Biden. Looking forward to the coverage around that trip. Let's switch our attention now to what is happening with the wider trade story and how US President-elect Donald Trump is going to affect it. The debate, of course, is swirling over how far Trump will go and will follow through on his tariff pledges. The import levies are something he's been clear are a political policy proposal.
To me, the most beautiful word in the dictionary is tariff, and it's my favorite word. It needs a public relations firm. There are no tariffs. All you have to do is build your plant in the United States, and you don't have any tariffs.
Today's Big Take here at Bloomberg looks at the drama and the realities of Trump's tariff war for more now, and the various scenarios we could be looking at here and how they're going to play out. Bloomberg's trade czar, Brendan Murray. Nice to see you, Brendan. Nice piece. How does Donald Trump deliver tariffs and not inflation?
Well, it's interesting what you've seen over the past week. Trump has threatened tariffs on countries that account for half the world's population. So that's a lot to digest. And so what we've done is we've taken the expertise of the Bloomberg economics with the reporting of Bloomberg News, and we've plotted out a plausible scenario toward tariffs that both deliver the campaign promises that the incoming president has laid out on the campaign trail, and doesn't wreck the economy. So it's a needle that could be threaded, but it's one that's a very careful line he has to walk.
What is the most likely scenario that you've been able to map out then?
It's one in which tariffs come in phases. They come in blocks, targeting certain products, and targeting, at least initially, products that are not consumer end products, but they're capital goods, machinery, parts, inputs that go into final products. So those conceivably, or at least that's what the economic team did, Trump's economic team did the first time around, they would target those first, so consumers aren't the ones that get hit, because of course he rode this election win on the back of an economy that voters were very worried about inflation.
So one example of where the tariff story gets quite nuanced, maybe, let's take the example of Canada, and he's already threatened to put certain tariffs on Canada, hasn't he? This was to do with drug flows and migration. But he's threatened to put those on, but then instantly a lot of people point out, well, what about all the energy imports from Canada? That's going to push up inflation and the cost of energy for American people. That's an example of perhaps where things will become more nuanced. It won't just be about, all imports from Canada.
Exactly. What we've heard from people over the past week is that these threats that we've seen, these social media posts, are really the beginning point of negotiations. They're not where they'll end up eventually. It's as we saw, Justin Trudeau got on an airplane, flew down to Mar-a-Lago, pledged more border protections and that kind of things. Mexico took a different tact. They got a bit more on the offensive and said, yeah, well, if you put tariffs on us, we'll retaliate against you. And those tariffs that you impose on us, there are a lot of American companies that they're going to suffer because of it.
Yeah, and that reaction function is going to be really fascinating to watch, isn't it? What difference do the people around him make, if any, Brendan? What's our best assessment of whether they really get to influence where this goes? Scott Bessent and the like, and Howard Lutnick, or whether this is really just all going to be decided by Trump?
Well, the people will make a big difference, and what we've seen take shape of Trump's trade team is a mix is a balance of those who will try to make Wall Street feel not so worried that this is going to crash the economy, but then again you have others. The USTR nominee Jameson Greer is an acolyte of Robert Lighthizer, who's the big Trump, the big China hawk. So we'll see, an internal debate that'll be very interesting to see how it plays out over the first 6 months, to see if the China hawks, if they're allowed to go big the way they want to go big with tariffs, balanced by someone like Scott Bessent, who will say, hang on a second here, we don't want to crash the stock market, we don't want the economy to slow. So that we'll see that internal debate play out, and as a result, our plausible scenario and our big take today says, will be something other than the worst case scenario, but something that does have a big impact too.
We don't want to crash the stock market. Could that be a way to argue your point with President-elect Trump? We've talked about that on this programme. Maybe that is something that is firmly on his Bloomberg dashboard. Thank you very much to Brendan Murray, Bloomberg's Brendan Murray, with a take on trade, of course. Coming up on the programme, the French government will not be blackmailed. French Finance Minister Antoine Armand speaks exclusively to Bloomberg, to our colleague Caroline Conan, as his government heads into an impasse with the far right over the budget. French banks starting the week in the red, those stocks trading down. We'll get more on this. This is Bloomberg.
In recent years, you created an institute, the Jane Goodall Institute, and what is that designed to do?
Well, that was started in 1977, when by then I had a little research station, and 4 of my students were kidnapped, and everything shut down. And so some friends of mine said, well, let's start an institute so that this research can carry on. Bless them. So that was 1977, and it was set up to study, conserve chimpanzees and other animals and educate. And it's developed since then. So it's, we've got 27 Jane Goodall Institutes around the world. And then I realized at some point that the African people living in and around chimpanzee habitats right across Africa were struggling to survive. There was crippling poverty, lack of health and education, moving deeper into the forest, being exposed to diseases like Ebola and HIV from the chimpanzees and vice versa. It hit me. If we don't help these people to find ways of making a living without destroying their environment, conservation won't work.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Welcome back to the opening trade. We are 43 minutes into that opening trade here for European equity markets, and you can see that the French market is underperforming, off earlier lows, but still down by 0.9%. It's a wide range of stocks moving lower, but the French banking sector is certainly amongst them. We see weakness there. We also see the political story in France being compounded, at least from a stock market perspective, by the specifics around Stellantis, and that stock is also under pressure in its French listing, down by 8%. Let's stick to the politics in France, though. France's finance minister has rejected Marine Le Pen's ultimatum over a new budget law, even as the far-right leader continues to threaten to push for a vote of no confidence against the government. Bloomberg's Caroline Conan spoke exclusively with Antoine Armand.
This government, in the last week, has clearly demonstrated its willingness to ensure that France could have a budget through evolution in the budget. And let me remind also that the parliamentary debate is still ongoing, and we have to wait until the end of this debate. But as you said, France is at a critical time. We have the arguments. We have the fundamentals. We have a perspective to reduce public spending and to cut borrowing, which is very important for France, but for Europe as well. So let's remind the political leaders in France that we have a common responsibility, and that this common responsibility includes voting, adopting, passing a budget.
Does that mean there's going to be more compromise, more concessions before Monday night, which is the deadline that Marine Le Pen has given you?
As I said, the French government doesn't take ultimatums. It's looking at the French parliamentary debate. It's respecting each and every parliamentary debate that leads to an evolution. We will take into account what is changing, but we won't be blackmailed. We are committed to reduce the deficit.
I understand you're willing to perhaps compromise, but Marine Le Pen has some specific concessions she wants from the government, including that all pensions be indexed on inflation as soon as January. And she also wants the government to give up this plan to abandon some drug reimbursement. On these two specific topics, is there any way to have more concessions from the government?
Let us not just focus on the Rassemblement National, because as you know...
but it's key.
It's key, but it's not enough. And as you say, for a vote of confidence to be adopted at the French Parliament, you would need to have the Socialist Party, the left parties, to vote with the far-right parties. So it would not only be the responsibility of Marine Le Pen's party, it would also be the responsibility of French socialists, French ecologist people who are willing to oppose to Marine Le Pen to vote together. It would be a very bad signal politically and economically for these countries, for our country, and for these parties who are saying and claiming that they could stay government parties.
Does that mean you're trying to negotiate with the Socialist Party, not the National Rally?
No, we are not focused on with whom we negotiate or not. As I said, the government is a government of dialogue, of respect, of co-construction. This budget has been co-constructed. It's not the result of just a government project. It's evolving within the days and the weeks of the parliamentary debate. We'll still be open, but not to blackmail.
Very interesting. Bloomberg's Caroline Conan joins us now from Paris. Really fascinating conversation you're having there then, Caroline. So he says they're not open, they don't want to be blackmailed, but they are open to dialogue. He was making that point. There's already been dialogue. It's a co-construction, not just the brainchild of the existing government. But you were trying to push him on very specific concessions that the RN wants to see. What else did he have to add to whether there could be more? Because they've already made concessions around electricity.
Clearly, his goal here was to reassure international investors, not giving Marine Le Pen any more concessions, because, as you heard, they've already made some concessions on prices of electricity, but not only, also, for example, on this reduction of some social contributions from small companies. And clearly, they're not open to really adding a lot to the deficit. Already, these concessions they already made are costing approximately 10 billion euros. Out of the 60 billion euros of spending cuts that they had already planned. So it remains to be seen. We know that time is running out because Marine Le Pen has set this deadline of 3 p.m. French time, 2 p.m. UK time today to see if she's going to back a vote of no confidence against the Prime Minister Michel Barnier this week. We heard from the president of the National Rally, Jordan Bardella, this morning saying it would take a miracle to change her mind. We also heard from another MP saying that Michel Barnier has to de-Macronize himself. So here we go. Get away from Macron, that's a new verb. And perhaps also what I find interesting with the conversation with Antoine Armand is that he's also calling for the responsibility of the socialists, because the socialists, they have 70 MPs, so they can also move the needle and they can also change the outcome of this possible vote of no confidence.
Caroline, if the RN decides to back the motion of no confidence later on today, walk me through the rest of the week. Walk me through the political choreography of how this is going to work.
Then it all goes back to whether actually the socialists also back this vote of no confidence. Technically, the government needs 44 out of the 70 socialists in order to overthrow this government. Technically, the vote of no confidence will probably be presented by the far left as soon as today. The vote of no confidence could take place as early as Wednesday, but then they also have to vote on the finances of 2024, so backward looking, and that vote could take place as soon as Friday. So there's 2 possible votes of no confidence this week, and then if the Barnier government actually survives this week, then they will have to vote on the overall budget the week before Christmas, so potentially facing another vote of no confidence on December 20.
Okay, Bloomberg's Gary gone up. Thank you very much indeed with that exclusive interview and what to look ahead to in terms of how this could be choreographed in Paris in the hours and days ahead. Here's what else to be thinking about this week then. Later today, President Biden will be visiting Angola. It is the first trip to the continent of Africa for a number of years for a US president. On Tuesday, it's his first visit, of course, to the continent at all since he's been president. On Tuesday, NATO foreign ministers will be meeting in Brussels. Can they do anything else to support Ukraine? That will be in focus. On Wednesday, some details and some more colour around the health of the US economy with the Fed Beige Book and the 2024 Monetary Policy Symposium. We'll be listening out, of course, for any comments from Jay Powell and whether or not he does lock in expectations from some in the markets that you get another cut later this month. And on Thursday is that OPEC Plus meeting, which was pushed back, of course, amid question marks about how far they can go in terms of returning some oil to the market. And on Friday, it is the jobs data. So non-farm payrolls with estimates of 200,000 for the month of November.
Will it ever end? Will it ever end? Black Friday, apparently today's Cyber Monday. Feels like there's been a lot of online shopping already happening. The first estimates are starting to come in, though, about how big a week it has been for the retailers. Last Friday, Thursday, Friday, into this week. And it looks like it's been a fairly positive one. We are potentially seeing US sales up on last year. Looks like the UK data is pointing us in a similar direction. Looks like this has been led by online. Bloomberg opinion columnist Andrea Felser, though, is here with more detail. So what is it looking like?
It's looking okay. It's not shooting the lights out. It's looking okay. It's definitely been led by online.
Yep.
Footfall in the UK was okay for last week. US, again, much more led by online than in-store. So I think it'll be okay. I don't think it'll be an amazing Christmas either side of the Atlantic.
Okay, so keeping our expectations measured. Andrea, my sentiment around Black Friday was, I forgot it was Black Friday. I went to go to the shops, then I realised how busy it was, and I turned right round and went home again before I got anywhere near it. Do other people feel this way? Is it a victim of its own success?
Well,
at least physically.
I think in Europe, it should never have arrived in the first place. It's just bonkers. You know, in the US, there is a reason you traditionally went shopping the day after Thanksgiving. In Europe, there is no reason to have Black Friday. All you do is give away margin. You know, this should be it's called the golden quarter because retailers, receive a lot of their sales and profits in this quarter. So why are you giving it away on discount? You should be maximising your profits.
Well, how generous were those discounts this year? How far did they go?
I think they were pretty much on a par with last year. The beauty, there did seem to be quite a lot of deals, and that was borne out by some of the analysts that have looked at the data. The other area where there were deals was on coats, boots, that sort of thing, because we had quite a warm October in the UK. We had a good September, quite a warm October. The US had a very warm October, early November. So apparel did see a lot of discounting, mainly that sort of cold weather gear that they hadn't sold.
I think what we really want to know is what Guy Johnson was buying over the weekend. You've got a renewed wardrobe.
So I went to one of the big kind of retail parky places, basically to act as a kind of bag carrier, and they were putting up sort of railing and crowd control stuff.
They knew you were going to be
No, I was there the day before, so this was not for me, Tom. Thank you very much indeed. But they were clearly getting ready for a lot of footfall.
Well, the timing was very good this year because it did coincide with payday, so people would get paid, would go to the Black Friday sales to get their Christmas presents.
And so give us the UK perspective on this then. I mean, you've already talked about how it shouldn't be here and all of that. Yeah. And yes, and I clearly turned tail and went home and did the Cyber Friday thing instead of Cyber Monday. But what's the experience in the UK? Has it been a positive one then?
It looks like footfall was up. I too was in the West End on Saturday. It was very busy.
Yeah.
Lots of people out. Now the question is, does that continue? Have people bought on deal and they won't buy? We need to look at whether retailers now go back to full price.
Mm-hmm.
They will be trying to, but I think it will be very difficult, particularly in the UK, to
go back to full price before Christmas? Or do the discounts continue for those of us who might miss that?
They do try to. What we tend to see is discounts continuing.
Okay.
And I think
you're all right, Tom.
How much of what is on the shelves is bought specifically for Black Friday?
Quite a lot. So things like electronics, you will find those deals will be agreed, back in the summer, even earlier, because they'll be shipping in the summer. They will be agreed. They will be, at a certain specification, a certain price.
Yeah.
They will be agreed. Things like the beauty gift sets, they will be bought in advance.
It takes a long time for things to get here these days with this, not using Suez. So the trade routes are longer. Andrea, thank you very much. Bloomberg opinion columnist Andrea Felsted helping to talk us through Black Friday. On to Cyber Monday. So as well as lots of cyber shopping, what else do we have to look forward to? Developments. We're obviously watching developments over in France to see what happens there. Mid-afternoon deadline from the RN to get some sort of concessions.
Will they, won't they? Will they, won't they? Having given such a strong indication that they're bringing the government down, to back off at this point?
And as Caroline said, then the focus goes to the socialists and whether what they're particularly looking for. So this might not all be down to the RN. But we're watching that. We're also watching, as the month goes on, what kind of stimulus we get out of China, Tom? That's a big question.
Yeah, I mean, that was actually a story that was relatively interesting today. So the data, as you said, was pretty mixed. On the private survey, manufacturing came in stronger. But it was the fact they held off on releasing this statement. So we're looking for another big meeting around the Politburo. But absolutely, investors are on tenterhooks about whether that additional stimulus comes through. The yield dropped through 2%, so there's money moving into Chinese debt.
The French market is down, but I hear LVMH has gone ex-dividend.
It has. It was worth saying that for the millionth time. And as we're talking about China on a programming note, join the top conversation at the energy transition at the Bloomberg BNEF Summit. You can scan the QR code there. It kicks off in Shanghai on December the 3rd.
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
This real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take-Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
As we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out. From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets. Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal?
Are markets too optimistic?
How do you worry about the things that are outside your control?
How does the current fighting completely stop?
I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
President Biden changes course and pardons his son Hunter just weeks before leaving office, claiming the case against him was politically triggered. Well, a new threat from France's far right to topple the government hours after the finance minister tells Bloomberg his administration will not be blackmailed. Plus, the Stellantis slumps after the chief executive, Carlos Tavares, quits after a dispute with the board over the struggling car maker's future. Now, good morning, everyone. There's quite a lot going on, but let's start it with the European markets map. As you heard it in the opening trade, we're seeing a bit of pressure on, of course, the CAC 40 over in France, but that's mainly to do with the LVMH that's actually gone ex-dividend. Now, a couple of the other things we're watching out for is, of course, what happens in France, French far right. Those threats to topple the Barnier government is definitely deepening, and that's showing up in some of the spreads. A couple of other things we're watching out for, dollar gaining. Again, the dollar pushing higher amid weakness in the euro and the yen. Traders also, again, digesting some of the political tensions in France and a rebound in treasury yields. I'm also looking at Stellantis, those share down more than 5%. And then a couple of the other things we're watching out for, treasuries dipping, traders actually looking ahead to U.S. data that may help shape Fed policy and assess hawkish comments from the Bank of Japan. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacroix.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacroix here in London. Now, the U.S. President Joe Biden has signed a sweeping pardon for his son Hunter, reversing his previous stance that he would not use his executive power to do so. Now, for more, let's bring in Bloomberg's Brussels bureau chief, Kevin Whitelaw. Kevin, why did he reverse his position on the pardon?
Well, I think he basically was explaining it that he is worried about the political ramifications of a Trump administration and essentially the threats that he's heard from Trump and the people around him about continuing to go after Hunter Biden on various things. So he basically said he got a little too worried that there was going to be a politically motivated set of continued prosecution of his son, and that he couldn't put him through that after all that he'd been through. But obviously, this is explosive in other ways, and a lot of Democrats were very, very upset when they heard about it because they were worried about losing sort of the moral high ground when it comes to the handling and the conduct in the White House and the use of the pardon power.
So what does this mean for the Democrats going forward and their approach to Trump?
Yeah, it's going to complicate it. I mean, I think that, we've already seen Trump had expanded the idea of the use of the presidential pardon in his first term, pardoning several aides and associates. And so it's not like this is, entirely new ground, but it is a family member in this case. And it just makes it that much harder for Democrats to try to sort of hold the line about how, what's appropriate, what's not appropriate. And this is a time where they've already been worried about the possibility the next administration is really going to take what had been a much more nonpartisan Justice Department and legal process and potentially use it for more partisan purposes. And so as they try to guard against that, this is sort of a bit of a chink in the armor.
Thank you so much, Kevin. Bloomberg's Brussels bureau chief, Kevin Whitelaw. Now, the president of France's far-right national rally has vowed to sink the French government unless there is a miracle. That latest threat comes after the country's finance minister told our Caroline Conan that he refuses to accept Marine Le Pen's demands for budget changes, saying the government will not be blackmailed. Well, Antoine Armand spoke to Bloomberg exclusively.
The French government doesn't take ultimatums. It's looking at the French parliamentary debate. It's respecting each and every parliamentary debate that leads to an evolution. We will take into account what is changing, but we won't be blackmailed. We are committed to reduce the deficit.
Well, let's get more from Bloomberg's Caroline Conant in Paris, who did the interview. So, Caroline, what else did Armand tell you about what other concessions the government is actually ready to make?
Francine, clearly, Armand was not talking to me to make more concessions to Marine Le Pen. He just wanted to reassure investors. He thinks that a lot of concessions have already been made, including on prices of electricity, on contributions of small companies. So clearly, this was a way for him to say that we need to pass this budget to make France stronger, and especially to keep the deficit under control next year, despite all the new concessions, which are estimated to cost about 10 billion euros. Antoine Armand told me that he maintains his deficit target at 5% for next year. We'll see how that pans out. Clearly, time is running out for this government. Marine Le Pen's national rally has actually given a deadline of today around 2 p.m. UK time, 3 p.m. French time, to say officially whether she will support or not a vote of no confidence that could happen as soon as this Wednesday and make the government of Michel Barnier collapse.
So what can we expect next, Caroline?
So today, we'll see this vote of no confidence, whether it actually happens. And then we could also have another one as soon as the end of this week on the finances of 2024, so kind of validating the budget of last year. And in fact, this 2024 budget is interesting because if the government collapses and there is no time for a new budget, this 2024 budget is going to be rolled over into next year, which in itself will not provoke a shutdown in France like we see, for example, in the US, but will definitely have a huge impact on deficit and clearly will not please Brussels. So we'll see how that pans out. And there's another deadline coming the week before Christmas when the National Assembly has to vote on the overall budget. So even if Michel Barnier's government does survive this week, there is possibly another vote of no confidence the week before Christmas.
Caroline, thank you so much for all of the great work there on the ground in Paris. Caroline Conant. Now let's get market reactions from Freya Beamish, Chief Economist at TS Lombard, and Bloomberg MLive strategist Noor Alali. Noor, thank you for joining us. Freya, thank you as well for joining us. Freya, how much should we worry about what's going on in France and how that could affect and impact the rest of Europe?
Yeah, it's obviously incredibly messy. So far, the EC has accepted the Barnier proposal for a 1.9% reduction in the deficit. That then has to get passed by the Assemblée. It's not going to get passed by the Assemblée, in which case the government is relying on decree, which is possible under the Constitution. 49.3 of the Constitution says they can do that, but then it's back in the ball is back in the court of the Assemblée. In the sense of these no confidence votes. But to get the no confidence motion passed, in which case the deficit would sort of stagger on at this 6.6% of GDP, to get that no confidence motion passed, they have to have an absolute majority, as I understand it, which is 289, and that then requires the left and the right, there's some kind of cohesion there. So we have the right now very clearly saying that they are willing to bring down the government, but there are still the 66 members within the bloc, which is the left, which is the mainstream Socialist Party, and they could still abstain. So there's still kind of, as I understand it, there's still something to play for in that question of whether we'll see the reversion of the oat spread.
But Noor, I guess with all of that, what's the investment case for a market participant?
Well, look, it's really tough, right? Because we're in a festive time, Francine. December is typically a really good month for the euro, for European stocks. We're expecting bonds to rally with the ECB expected to cut rates. And now you've got all these fiscal concerns that are weighing so heavily on the euro area's second largest economy. So from an investment standpoint, perhaps those yields, those spreads going wider makes sense. But as I note today, the spread didn't widen to the levels that we saw last week, right? It has widened by the most since June at the open, which, you know, we keep spreading that size and scope more and more. So there's definitely a lot of concern. And that 2 p.m. deadline today for that no confidence vote that Caroline was talking about is something that's going to get a lot of traders stuck to their screens waiting to see if we're going to get more instability, more uncertainty, or some clarity at least.
Freya, where does the good news come from in Europe? We have elections in Germany. Again, a lot to go for, and you need this Franco-German axis maybe to counter the Trump tariffs.
Yeah, I'm actually quite positive about the fact that the election in Germany has been called. I think the constitutional debt brake is finally coming under the pressure that it deserves to come under. We've been a house that for many years now has suggested that there should be a greater understanding of the downsides of the fiscal austerity that is imposed on Germany and therefore the European bloc by the constitutional debt brake. And the fact that we're having this election now on the heels of strong gains for the AfD in the most recent elections, I think this is a good thing to sort of force policymakers to sort of realize what needs to happen. With the threat of Trump 2.0, with the threat of the withdrawal of funding for Ukraine, that increase in defense spending as a percentage of GDP that has already happened will continue up towards the 2% and probably beyond the 2%. For Germany to really kind of get on board with that, we do need a higher degree of fiscal federalism, which is due, and I think would be positive for the rebalancing of the bloc. And that election coming at this stage really kind of pushes policymakers to say what their case is, to state their case, and hopefully that comes down on the side of allowing these kind of ways of coming around the constitutional debt brake and moving towards greater fiscal federalism.
Nor what if, again, the German election doesn't really give us a clear outcome? If you look at some of the risks out there, is there anyone that can take the place of France and Germany in a new axis that the markets would welcome?
Well, look, at some point last week, Francine, we had the across the curve here, the Greek debt issuances is actually within the French. So you can actually see that yields have been rising in France at levels that now we're comparing to Spain, we're comparing it to Greece, you know, countries that are on the periphery that are notoriously known to having fiscal issues that generally keep markets uncomfortable. Now, we've been talking long about how bond vigilantes this year have been here. You know, we've seen it back in 2022 in the UK. We've seen some semblances of it across treasuries, the UK gilt market again, and now in France. And so the concern here is that bond vigilantes are really not going to catch a break into the year end because there's just one too many risk events that are out there. You also have that concern of tariffs, how that's going to play out in Europe. The euro area, its major trading partners beyond the region are in fact both China and the US. So really, whichever way you look at it, it's not looking pretty bright.
Freya, how would Europe actually deal with the Trump tariffs? Again, we don't know whether they're 10, 20%. We know that Europe says they're much more organized than the first time round. How much does that hit the economy?
So again, thinking about kind of core versus so-called periphery, the periphery is actually doing really well. And going back to the previous comments we were talking about, the watershed moment there was actually next generation EU. That's when we started to see those kind of synergies picking up. With regards to the reaction of Europe to the tariffs, I think it's going to happen very much on the business level, and there's pros and cons to that. I think that business, multinational corporations, there's actually quite a lot that multinational corporations have to offer Trump, and I think that's the level that he's going to work on. So we'll see businesses doing deals with Trump to make factories in the US. Some have a lot of space to do that because they don't employ that many, in some countries they don't employ that many workers in the US. There's some countries that really stand out as kind of likely to receive more kind of targeting of tariffs if that's the route that is taken, which is what we think. Germany is definitely one of those. Ireland is really high up there with a massive surplus with the US. So I think it's gonna end up being sort of more case by case, partly because of the US legal system, but also because I think businesses will have something to offer Trump, and I think he's gonna want to go down that route of getting wins rather than imposing inflation on the US economy.
Freya, thanks so much. Freya Beamish from TS Lombard stays with us, and thank you as well, Noura Al-Ali from Bloomberg MLive Strategy. Coming up, we'll talk a lot more about Trump. We'll talk about inflation and immigration in the U.S. Stay with us for More market analysis. This is Bloomberg.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
Well, still with us, Freya Beamish, Chief Economist at TS Lombard. Freya, there's so much to talk about, given that we don't know much about the Trump policies in concrete, but he talks a lot, about them a lot, saying that tariffs is also his favorite word. What do we know so far, and who do they hit first? China, Europe, or emerging markets?
Yeah, I think Europe has a lot more to offer. They are allies, so they have the option of sort of sweetening things by offering factories and to build factories in the US to create jobs in the US in the same way that these types of trade talks decades ago happened with Japan. That was the route out. China doesn't have that option, and China also has the underlying economic imbalance of being deleveraging when the rest of the world has already deleveraged. So they have this natural tendency towards needing to rely on external demand. So I think there's going to continue to be sort of flashpoints there. It's going to come down to, how many U.S. airplanes is China willing to buy, and also this kind of deeper shift of moving towards domestic demand, which seems to be happening at the margin amongst Chinese policymakers over the past couple of months. They seem to be realizing that deflating their way out of a debt crisis is perhaps not the best thing for their own internal politics either. So there are some kind of there's some good signs there as well.
Freya, when tariffs hit, and I don't know whether it's if or when, the market seems to be pretty complacent that actually this is a negotiating tool. I hear from economists and market participants that they're much more worried about it. But when they hit, is it automatically inflationary also for domestic U.S.?
Yeah, I think markets have been focusing much more on the sort of demand side policies and not so much on the risks of these negative supply shocks, which are really serious risks. I think I'm still in the camp of suggesting that he's going to want to go down the route more of using it as a negotiating tool. That certainly seems to be how Bessent views tariffs, and that could be a good thing for global demand for the U.S. economy in terms of just that focus on demand side rather than injecting these negative supply shocks. But negative supply shocks can be incredibly serious for markets. In terms of whether they create inflation, there's certainly a one-off inflation shock. If we look at 2018, But even if you look at the level of prices, not even just inflation, if you look at the prices of washing machines in 2018, they went right up at 100% 3-month annualized rate, which is eye-watering, but the level came all the way back down again. So in the first instance, these are sort of one-off inflation shocks. The way in which it translates into higher inflation on a systemic basis is if it actually does create deglobalization, in which case the US economy looks much more to US labor costs and the progression of US labor costs when it's generating its own CPI inflation. And we know that there's a structural tightening of the US labor market, particularly as immigration seems likely to decline.
Freya, thank you so much for all of those insights. Freya Beamish there, Chief Economist at TS Lombard. Now coming up, Stellantis shares under pressure after the Chief Executive steps down. More on the auto sector next, and this is Bloomberg.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg.
Well, the Stellantis chief executive, Carlos Tavares, has resigned after a dispute with the board over how to reverse weakening sales and a stock slump. Bloomberg's Oliver Crook joins us from Berlin. So, Ollie, let's start with Stellantis. It seems that the European auto crisis has claimed its first chief executive.
Yeah, that's right, Francine. I mean, listen, there's a sort of sense at Stellantis that basically it never recovered from that profit warning that they issued back in September, and it's been sort of staggering forward ever since. And even at the time, there had been speculation that they might replace the CEO, Carlos Tavares, but he moved very fast in that moment to sort of quash all of those discussions. He got rid of the CFO, he reorganized the entire structure of the business, a new COO, a new COO for North America, replacing the heads of Maserati and Alfa Romeo, and really has been sort of staggering forward through time here, but basically basically was not enough. What I think is interesting is that this all came to a head on Saturday, and it went fairly quickly from unanimous support of the board to so-called strategic differences. And I think that for many in the analyst community, and you can see it there represented on your screen right there, Stellantis down more than 8%. Why is it better to have basically an interim CEO or no CEO for this period of time rather than just holding on to Carlos Tavares and just sort of accelerating the search for a new CEO, which was already sort of ongoing beginning back in September when we had already known that Tavares was going to leave basically at the end of 2026. That timeline has just sort of really ramped up very quickly, and we should say we can sort of understand some part of this because, of course, Stellantis, despite having outperformed a lot of the other automakers through the last few years, this year is the worst performer in Europe, down some 45%. That's being added to, of course, this morning by the strong sell-off.
But Ollie, how much of this is a Stellantis problem versus an industry problem?
Yeah, so Francine, this is really interesting. When you contrast Stellantis versus, say, some of the other auto manufacturers like Volkswagen, who, by the way, is also not having, having its own issues, beginning strikes today because they could not get a resolution with management over the sort of job cuts there. What Stellantis didn't have is that huge exposure to China, so it was sort of insulated to some of the issues that some of the German automakers were having. What they did have is increasing problems over in the United States, and that is really at the heart of the problem of Stellantis right now. There's been a huge amount of inventory sitting on lots. They went from basically almost about 12% of the U.S. market share down to about 8% over the last sort of year period of time. And that has really been concerning a lot of people. And there was some real question about whether Tavares could really turn this around. The issue with this, and the reason that the sort of market perhaps is sort of unsatisfied with the swift departure of Tavares, he was also the king of cost cuts within the auto sector. The critics would say that he cut a little bit too far and that sort of represented itself in some quality control issues over at the car maker.
Ollie, thanks so much. Oliver Crook there in Berlin. Coming up, we speak to the chief executive of Ukraine's largest steel producer, Metinvest. We talk business performance and the impact of the Russian invasion.
I think one of the dirty little secrets of credit is that the businesses generally don't pay you back, right? The markets pay you back, M&A pays you back. So what is the most important thing is to always make sure that the borrower is worth more than the loan. And as long as the borrower is worth more than the loan, then it might be a rocky ride, but you're going to get your money back. And this world where there's these disruptive companies that have, let's call it 100, 200, 300 million of ARR, are looking to not raise equity capital because of the fact that they raised it in 2021 or 2022, and no one really wants a down round. But there's a lot of capacity in the capital structure to have, let's call it a structured solution. We think that there's a lot of opportunity with those businesses.
Countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now. We have Take-Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Keely Lines deliver news, insight, and analysis live 2 times a day every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Get your Fixed Income Fix. Half an hour dedicated to fixed income. Watch Bloomberg Real Yield. Context changes everything.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacroix here in London, and these are your top stories. President Biden changes course and pardons his son Hunter just weeks before leaving office. A new threat from France's far right to topple the government hours after the finance minister tells us his administration will not be blackmailed. Plus, Stellantis slumps after the chief executive, Carlos Tavares, leaves the company after a dispute with the board over the struggling car maker's future. Now, the German chancellor has arrived in Kyiv to meet the Ukrainian president, Volodymyr Zelensky. Olaf Scholz is expected to announce more military equipment to the country worth 650 million euros. Now, last month, the German chancellor faced criticism from holding a direct phone call with the Russian president. To talk about all of this, let's bring in Mark Champion from Bloomberg Opinion. Mark, thank you for joining us. So, Olaf Scholz has arrived in Kyiv and actually we're expecting him to announce this additional military equipment worth 650 million euros. What does Ukraine need right now?
Well, I mean, Ukraine's been very clear about what it wants. It needs a lot of aid, essentially the real issue here, and Scholz kind of expresses this very well, is that we're all awaiting a new Trump administration, especially in Kyiv. And it's very unclear whether the U.S. policy towards Ukraine and supporting Ukraine will be continued. And so, of course, then the question for the Ukrainians is, how do we survive even through any negotiations that Trump might, bring in? And then, of course, that the only other people there really are the Europeans. The Germans obviously are actually a large part of that. They've been major suppliers of weapons. But it also, at the same time, shows the sort of weaknesses in Europe and, real questions around whether it's capable of, coming through.
What do we know about Russia's foreign policy as we get ready for Donald Trump in the White House?
Well, I think that they, like everybody else, are trying to figure out exactly, what the new administration will have as red lines for itself, what policy it will follow. It's clear, the Russians are interested in the expression from Trump that he wants a deal quickly. The Russians would like that, but they have very clear, and they've been very clear about what they want to get from a deal, and that is essentially what they've always wanted in Ukraine. So demilitarized, denazified, as they call it, etc. Territorial issues are important, but perhaps lesser.
What can you tell us about Syria?
So in Syria, it's really interesting in the sense that you've got the result of Russia's extreme engagement in Ukraine at the same time as Israel's attacking, weakening Hezbollah and Iran. It's created this opportunity for the opposition forces that have been protected and nurtured by Turkey to move forward. And I think they've surprised even themselves by the ease with which, initially at least, President Assad's forces just melted away.
So we have this headline, Kremlin saying that Russia is continuing to support the, Mr. Assad of Syria, but there's also reports about him flying to Moscow.
He flew to Moscow, and the Russians have said that they will support him. They are. There are airstrikes that they're conducting.
Yeah.
But the capacity of Russia to really get involved. Let's say, for example, that the Syrian forces again, as they did in 2015, begin to really collapse. What will Russia be able to do? What will the Iranians be able to do on the ground? Then they were able to bring in different militias, including Hezbollah. Hezbollah is now very much weakened.
Mark, thanks so much. Mark Champion there from Bloomberg Opinion on the very latest, of course, in the region and the Middle East. Now, Russia continues to target Ukraine's energy and infrastructure with missile and drone attacks. Let's discuss all of this with Yuri Rintentsov. He is chief executive of Metinvest. It's Ukraine's largest steel producer and parent company of the Azovstal plant, which became a symbol of Ukrainian resistance during the siege in 2022. Thank you so much for joining us again. I think last time we spoke, Mr. Rintentsov, you were telling me that actually you needed a bit more comfort, that the war was, if not coming down, certainly slowing down. The war risks decreasing considerably for you to build Green Deal projects. Can you elaborate on that a little bit more? What do you see now and what are you hoping to see in the next couple of months?
Well, unfortunately, the situation remains pretty challenging in Ukraine, and we haven't seen any slowdown in the war. In fact, we've seen some speeding up in the last half a year. So the investment climate is still not forthcoming for the investments to be done in Ukraine. However, as a player on the international arena, especially in the European markets, Metinvest decided to start a project on a green steel plant in Italy, which will be the pilot project for us and for our partner Danieli, to then reconstruct Ukrainian steel industry once the war is over, once we have a definitive end of the war.
Yeah, when you say definitive, I mean, does it mean that a peace agreement will have to be signed for you to make large investments in Ukraine, or is the freezing of the war enough?
Freezing of the war is not going to be enough. We already had freezing of the war when we had Minsk agreements. And we all saw what happened after that to the Minsk agreements. So now we need some solid security guarantees for Ukraine. And only that will be able to bring major investments into the country, including the green steel investments. Before that, I doubt any serious investments will be coming into the country, unfortunately.
So how much could you put in Ukraine, and how much have you put in Italy so far?
Well, the project in Italy is a €2.5 billion project, which will be obviously financed by the equity injection, but also by the financial institutions, state-owned and public funds. But if we're talking about Ukraine, we will need the similar magnitude of investments to turn around the Ukrainian steel industry. And that's why I'm saying that without the definitive end of the war, without the security guarantees, I don't see how this is feasible in the near future. I just don't see how investors would be able to commit those finances to modernizing Ukrainian steel industry.
So it would have to be some kind of peace agreement with security guarantees, I guess, from the U.S.?
Well, at least security guarantees. I'm not sure what sort of peace agreement have to be in place, but the security guarantees will have to come from our allies, from our partners, from the U.S., from Europe. And they have to be serious enough to convince the investors that this is the end of the war and Russia will not re-attack a few months or few years later.
Yeah, how nervous overall are investors at the moment at this juncture in time?
The way I see it at the moment, the investors are just not investing. That's as simple as that. There are some investments that are being backed up by the governments of European countries or indeed some other countries around the globe, and those that are backed up by the state funds, they are going through. But the private investments, the just normal financial investments, they are on hold. They're waiting for the situation to clear.
Mr. Rinsenkopf, I think last time you spoke on Bloomberg, you also said that you were looking at possible M&A opportunities in neighboring countries. Can you elaborate on that and what kind of projects you're looking for?
Well, we're still open. We're open to all sorts of projects that we can see the synergy with our resource base that we have in Ukraine. So we're looking at the possibilities to acquire and modernize the facilities that are not decarbonized green steel at the moment, but can be. And there are some facilities in the neighboring countries that qualify for that. I'm not going to tell you the names because that may damage the negotiations. But also we're looking at the distressed facilities that already kind of decarbonized steel assets and that we think we can turn around and bring back to life. So all of those assets are mainly located in the South and Eastern Europe, and that's our region of activities, and that's where we're looking for them.
And are you confident enough that there's sufficient demand, given concerns about the world economy, but also that you find the sufficient projects that make sense for you to invest in?
Well, the demand is quite weak at the moment for the steel products, especially in Europe. In Europe, we are seeing struggling steel companies throughout, but steel is the most universal material in the world, and it's a very cyclical business. So yes, now we're in the down cycle, but we know that there's going to be an upside later on. So we're ready to invest now to see that upside.
Okay, thank you so much for joining us. Yuri Rinsankov there, the Chief Executive of Metinvest, with, of course, a very important conversation. Coming up, President Biden heads to Angola, the first U.S. president to set foot on the continent since 2015. We head to Luanda to bring you all of the details. That's next, and this is Bloomberg. From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
U.S. President Joe Biden is heading to Angola, honoring his pledge to visit the continent of Africa just weeks before leaving office. Now, the trip will be Biden's only visit to Africa during his time as president, as he seeks to deepen the U.S. commitment to the continent. Well, Bloomberg's Africa correspondent Jennifer Zabazaja is in Luanda for us. Jen, good morning. So what can we expect from the visit? And honestly, why now?
Yeah, Fran, good morning to you. Listen, this was a promise that Biden made very early on in his presidency. As you mentioned, we have not seen a sitting U.S. president visit sub-Saharan Africa since 2015. We haven't seen a sitting U.S. president actually visit Angola. So for the Angolan people and the Angolan president, this is a significant trip, whether or not Biden has a few weeks left or not. But from the U.S. perspective, this is important because they say that they want to strengthen economic ties, but then also also showcase what they say as opportunities for the future. So part of the trip is going to be focused on the past. Of course, the Angolan port was a major transatlantic slave port back years ago. But also for the future, it is seen as an economic hub and really a main artery for the future of mineral trade across the Lobito corridor. And so really when we think about sort of the main focus of this trip, it really is this Lobito corridor. It's a multi-billion-dollar investment play by the U.S. to revive this railway, critical to copper and cobalt transportation. And of course, when you think about over the past few years, Angola in particular has relied on other countries for investment, hoping though that this is an opportunity for the U.S. to come in. And also, it's important to think about the position for Angola. For a number of years, they relied on exports of oil for their revenue, and they really have been told, especially by the IMF and others, that they need to diversify their economy. So what we have heard from President Lourenço is that potentially doesn't matter what U.S. president is coming, but the fact that a sitting president is coming gives a stamp of approval and a sign to investors that Angola is open for business and potentially the opportunity then to invest in other parts of the economy and hopefully see it grow. So we'll wait to see both presidents meeting for a bilateral meeting. They'll also visit the Lobito corridor, and we're anticipating some announcements coming throughout the next few days.
So Angola has key ties with China, Jen. How does the U.S. wish to reshape this, if at all?
Right. You know, Fran, when some reporters were actually asking about this the other day, and were saying the U.S. responded saying that it's not necessarily about making any countries choose. It's about countries having choices. And potentially then, if they do have choices between different partners, they're able to demand more. Angola, for a number of years, has, as you mentioned, had ties, very close ties with China, with Russia. China in particular has been investing billions of dollars into this country, into infrastructure, but has been criticized by many officials, nonetheless President Joe Biden, for their lending practices in the past. And so the U.S. says this is an opportunity then to potentially reshape the relationship, but then also attract different kinds of investment and different kinds of partnerships. So that is their hope. But from the Angolan perspective, the president of Angola, again, has said it doesn't matter which president is in office. They are looking for any and all partners. And so, again, we will see the U.S. potentially then looking to use what will be very critical for the EV transition, this Lobito corridor, as really an anchor to the broader strategy that they see as future investment into this part of the world.
Jen, thank you so much. Bloomberg's Jennifer Zabazaja there in Angola. Now let's bring you some of the others' top stories today. And Georgia's president is defying the ruling party's plan to replace her as protesters rallied outside parliament in the capital, Tbilisi. Now riot police fired tear gas and water cannons to disperse the demonstrators. The protests were sparked by the government's decision to delay talks on joining the European Union until 2028. In Romania, the ruling Social Democrats are on course to win parliamentary elections. According to preliminary results, the incumbents have about 24% of the vote, against about 18% for the far-right alliance for the unity of Romanians. Well, the NATO member state was on edge a week after a fringe independent candidate secured a shock victory in the first round of the ballot. Ireland is heading for a return to the coalition government led by the Prime Minister Simon Harris. Now, with two-thirds of results count announced, the main two parties are on track to get more than 80 seats, meaning they will need the support of a smaller party to get to the 88 needed for a majority. And the far-right National Rally has indicated in the strongest language yet that it could topple the French government as soon as this week. Now, party President Jordan Bardella has vowed to sink the French government unless there is a miracle. His comments come hours after the finance minister, Antoine Armand, told Bloomberg exclusively that his administration would not be blackmailed.
This government, in the last week, has clearly demonstrated its willingness to ensure that France could have a budget through evolution in the budget. And let me remind also that the parliamentary debate is still ongoing, and we have to wait until the end of this debate. But as you said, France is at a critical time. We have the arguments. We have the fundamentals. We have a perspective to reduce public spending and to cut borrowing, which is very important for France, but for Europe as well. So let's remind the political leaders in France that we have a common responsibility, and that this common responsibility includes voting, adopting, passing a budget.
Does that mean there's going to be more compromise, more concessions before Monday night, which is the deadline that Marine Le Pen has given you?
As I said, the French government doesn't take ultimatums. It's looking at the French parliamentary debate. It's respecting each and every parliamentary debate that leads to an evolution. We will take into account what is changing, but we won't be blackmailed. We are committed to reduce the deficit.
I understand you're willing to perhaps compromise, but Marine Le Pen has some specific concessions she wants from the government, including that all pensions be indexed on inflation as soon as January. And she also wants the government to give up this plan to abandon some drug reimbursement. On these two specific topics, is there any way to have more concessions from the government?
Let us not just focus on the Rassemblement National, because as you know...
but it's key.
It's key, but it's not enough. And as you say, for a vote of confidence to be adopted at the French Parliament, you would need to have the Socialist Party, the left parties, to vote with the far-right parties. So it would not only be the responsibility of Marine Le Pen's party, it would also be the responsibility of French socialists, French ecologists, people who are willing to oppose to Marine Le Pen, to vote together. It would be a very bad signal politically and economically for these countries, for our country, and for these parties who are saying and claiming that they could stay government parties.
Does that mean you're trying to negotiate with the Socialist Party, not the National Rally?
No, we are not focused on with whom we negotiate or not. As I said, the government is a government of dialogue, of respect, of co-construction. This budget has been co-constructed. It's not the result of just a government project. It's evolving within the days and the weeks of the parliamentary debate. We'll still be open, but not to blackmail.
Well, that was more from our exclusive interview with the French Finance Minister Antoine Armand, made by Caroline Conan. Coming up, a bumper Black Friday in the U.S. with a jump in online sales compared to last year. We'll have more on how consumers have been spending their money. That's next, and this is Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Well, retailers are continuing their Christmas sales push this Cyber Monday. Now, a first estimate from Black Friday suggests that U.S. sales grew compared to last year. Bloomberg opinion columnist Andrea Felstead joins us. Andrea, always good to speak to you. I mean, so there's Black Friday, and then there's Cyber Monday. I mean, when do we know how well they did?
I think we'll get a feel after today, really. I mean, Cyber Monday is not as important as it used to be. Cyber Monday was always the day you had to order for delivery for Christmas. Well, now you can get delivery right up until Christmas. So it's slightly pointless, but it's still another excuse for deals.
I mean, I kind of feel like they're often on sale. There's a lot of deals. I know this is the biggest, but does it somehow get lost because there was a deal in June or July, or is it still the big one?
This is still the big one. The deals have got earlier. They really start in October with that second Prime Day of the year, and then they really kick off in November. It has been interesting to see the deals progress. There have been bigger deals for this weekend. Beauty, lots of beauty deals about. Clothing as well. The US was very warm October, early November, so there were lots of cold weather items. They will likely find their way into the sales. Same here. We had a great September. It was cold, but October was quite warm. So, you know, you were seeing, I was in the West End Saturday, you were seeing lots of up to 40% off, up to 50% off. It's likely to have been those cold weather items that they haven't sold that are going into the sales.
And this, I mean, it's also coming to the UK and other parts of the world, right? Is this going to be like a make or break moment for retailers the world over?
Oh, yes. I mean, Black Friday's been exported around the world. It should never have been. There is no reason to have Black Friday here. It's the biggest, act of self-sabotage retailers have ever done, because you want to sell at full price going into Christmas. Now, everyone waits for those deals. This year in the UK, it coincided with payday, so it looks like the footfall was up quite a big weekend. People will get paid. They will be looking for the deals to mainly get presents, but also to treat themselves.
Andrea, thank you so much. As always, Bloomberg opinion columnist Andrea Felstead. Coming up, a Bloomberg Brief with Danny Berger and Manus Cranny in New York, and this is Bloomberg.
Okay, today I'm going to talk about how to succeed with a startup. Obviously, more than can be said here in 20 minutes, but I will do the best I can. The most important thing, the number one lesson we try to teach startups, is that the degree to which you're successful approximates the degree to which you build a product that is so good, people spontaneously tell their friends about it. Startups always ask us for the secret to success. They always want to believe it's something other than this, because this is really hard to do. But this is it. If you can build a product that is so good, people spontaneously tell their friends about it, you have done 80% of the work that you need to be a really successful startup. If you think about the most successful companies you know, Google, Facebook, whatever, you probably found out about them because a friend of yours said, you got to try this, it's great. So this is the bar. Something that people love so much they tell their friends about it. One important indicator for a product like that is a product that's simple to explain and easy to understand. if you can't explain in a few words what you do, and if at least some people don't say, oh, that's pretty interesting, that's usually a mistake. It's usually a sign of unclear thinking or a need that is not big enough.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
Hi, I'm Laurie Haynes, CEO and co-founder of Shirar, and I'm really excited to tell you that we are going to be raising funds for Shirar again. After a successful raise in 2023, it's time to scale.
We hope that you enjoy the pitch deck and the financial model. Any questions, please don't hesitate to ask us, and we can't wait for you to be part of Shirar.
I will show you how to get the best funding for your startup idea. Let's get started. Here's the deal. If you have an amazing startup idea and need funds to fuel it, we're here to help. Simply send us a video where you explain your idea. Make it clear, concise, and compelling. Hook us in with your passion and vision. Don't forget to include your contact details so investors can reach out directly. This is your chance to shine and get your idea in front of people who can make it a reality. Imagine turning your startup dream into a thriving business. It all starts with that one simple step. So what are you waiting for? Grab your phone, hit record, and let your idea fly. The future of your startup could be just one video away. Remember, be clear, be passionate, and most importantly, be you. We can't wait to see what you've got. Let's get funded now.
The only people that didn't manage to make a new all-time high last week, even though $141 billion of money flew into U.S. equities, the best 4 weeks on record. Roll it over, have a look at the bonds. We step back this morning, so up 4 basis points on the 10s. We both checked this morning. Last week, we dropped by 23 basis points, and Julian Emmanuel at Evercore says apparently the bond vigilantes, apparently they've gone on holidays. They've gone home for the holidays. We'll take a snapshot of the euro. This is the euro under pressure. French budget woes really are in focus. Will Marine Le Pen topple the government? The National Rally President Bardella said he'll sink the French government unless there's a miracle deal in terms of what's going on with the budget.
So here we are, France's bonds basically trading like Greece, which is apparently the ultimate insult for Europe. Chinese bonds are below that of Japan. Up is down, down is up. All of this world order shifting, Manus, even before we have a Trump presidency, and really understand the full thrust of what tariffs might mean.
And I think an example of that is you've got Justin Trudeau flying down to Mar-a-Lago over the weekend. You've got a message from Trump to the BRICS nations. What is this? It's about weakening the coalition. Perhaps it's about Tina. There is no alternative to the dollar. I want allegiance, and I want near fealty to the dollar. What does that do to strong dollar, weak dollar policy?
And we were both talking about Peter Scheer this morning over the weekend, saying that the market consensus has shifted to just assuming that this is an opening salvo. For Peter Scheer, that concerns him. I mean, anytime there's a big consensus in the market, fair to say that that concerns a few people.
Yeah, well, you got to say when Trudeau gets on a plane, flies down to Mar-a-Lago, it's smart chess piece moves to sort of be on side with President-elect. But one message came from President-elect Donald Trump over the weekend. It was this warning to the BRICS nations in case they were still considering uniting around an alternative currency to the ubiquitous US dollar. He posted on Truth Social over the weekend this: they will face 100% tariffs and should expect to say goodbye to selling into the wonderful US economy. Valentin Marinev is the head of FX strategy at Credit Agricole. He joins us now. So look, Valentin, good to have you with us. The dollar is bid this morning for multiple reasons. I want to get your take on this. Is this message from Donald Trump to the BRICS about destabilizing that alliance, or really affirming to the world, I want fealty to the US dollar?
Well, I guess you could have to really ask Trump to maybe explain, or President Trump, President-elect Trump, for an explanation about that. But I guess my own interpretation of the remarks certainly highlight that Trump does want to have his cake and eat it too. Certainly, President-elect Trump would like the U.S. economy to be trading less with the rest of the world, therefore running less of a trade deficit. And equally, he also wants the rest of the world to continue to use the dollar as if nothing has happened. And I think one of the two things is, actually they're quite incompatible, so one of the two things have to give over the longer term. Our best guess is that as Trump and his administration continue to try to reduce the trade of the world with the U.S. as they're trying to reduce the U.S. trade deficit. One of the consequences of that would be weaker dollar down the road. As a matter of fact, a weak dollar may be part of the solution if you want to reduce the U.S. Trade deficit. On the day, however, the comments are seen as potentially suggesting that Trump is a strong dollar politician who would be ultimately resisting any calls for currency weakness. To me, it's just adding to the overall inconsistency of the policies that the Trump administration will be pursuing next year. And clearly, to your point in your question, certainly encouraging other economies not to abandon the dollar just yet.
Valentin, how do you understand, though, whether this, as the market is interpreted, that Manus and I discussed, that Peter Scheer is saying, that it's an opening salvo? How do you understand that versus, you know, the first move of the chess gambit versus believe Trump, he means what he says, and trade accordingly?
Well, I think Donald Trump is fully aware that really part of his policies, at least, is quite inconsistent. But it is the case that if he does want to reduce U.S. trade deficit at a time where he also wants to pursue a policy of aggressive fiscal stimulus, the administration has to make sure that the funding conditions for the U.S. from here are likely or should remain favorable. And a big part of that, indeed, is a stable, potentially stronger dollar. And I guess this is what the long game is for the Trump administration from here, really try to pursue a protectionist, really even mercantilist policies, while at the same time keep the dollar stable and potentially even allow slight appreciation there. So the game has just started, and I guess next year would be the time and place where we're really going to experience more of the same. But once again, I think the lack of compatibility between those two objectives could ultimately claim a victim, and that victim may indeed be the dollar itself.
Well, how do you play defense next year? If we're going into 2025, it looks like a number of central banks are going to have to be on the defense. And ground zero for currency wars 2025 is dollar yuan.
Yes, indeed. And I think that that is one of the key, really focal points, if you wish, for many investors. And I guess for quite a few clients, I've been discussing that with 2018 is a useful template when it comes to the impact of the Trump's policy mix on the broader economy and I guess the broader FX markets. Back then, as investors like to highlight, dollar renminbi went from 620 to 720, almost 15, 20%. Really depreciation for the currency. We think, however, this time around there is far less appetite for yuan weakness, at least from the point of view of the Chinese officials. It is the case that 750 is a psychological level which, if broken, could fuel financial stability concerns, and those considerations could actually mean that the PBOC, while a participant in a currency war of sorts next year, would be quite reluctant really to really participate in full. So therefore, we think that yes, the dollar may be slightly weaker from here, slightly stronger from here, but no repeat of the 2018 rally.
Perhaps where ground zero then ends up being, Valentin, is the euro. It's not just Trump tariffs. It's an auto industry that's on its knees. It's political discord in France. What do you do with the euro? Can you buy it at any point? Is it parity and inevitability at this moment?
Well, I would like to think not, but impossible is nothing, as they say. The point is that it's a perfect storm for the euro at the moment on the economic, political, geopolitical front, and quite a few of our clients are quite bearish. And you mentioned parity, and it's really the rallying cry of all the euro bears out there. They will not want rest until we get to that. It is the case, however, that my personal view would be that a lot of negatives are already in the price. However you look at it, really on the political, geopolitical, and economic side, really it does suggest that some, if not all, of the negatives are already in it. So from that point of view, where it does remain a sort of a pressure valve for all the investor fears out there, I would be cautious in extrapolating the recent losses really from current levels. I mean, you mentioned France and the French political developments at the beginning. It is the case that they will actually matter for the euro when they start to matter for the ECB, when the French political uncertainty starts to weigh on the outlook in a meaningful way, and indeed it feels contagion to the rest of the EGB markets. So far, there seems to be fairly little evidence of any of that. So from that point of view, we also remain, we think that the ECB will disappoint the dovish market expectations that are in the market. And as a result, again, once again, I do struggle to see euro trend on a trend depreciation from current levels targeting parity.
Yeah, at the moment, euro at 105. Valentin, great to catch up with you this morning. Valentin Marinoff of Credit Agricole, thank you so much. Let's get to some of the other top stories trending on the terminal this morning. The Biden administration unveiled new restrictions on China's access to vital components for chips and AI. That all escalates a campaign to contain Beijing's technological ambitions. The U.S. announced 140 more Chinese entities that it accused of acting on Beijing's behalf, blacklisting them, though it didn't name them in an initial statement.
Well, the EV makers, including Tesla and BYD, are offering discounts and incentives in China. This is to meet their annual sales targets. Tesla's offering a 5-year 0% loan and a 10,000 yuan, that's $1,380 discount on its Model Y. And BYD is offering 1,000 yuan to 3,000 yuan off the same models.
BlackRock is nearing a deal to buy private credit manager HPS, beefing up its alternative asset offering. An agreement could be announced as early as the coming week. It would value HPS at $12 billion or more. BlackRock will pay for HPS with a mix of cash and stock, all of that according to people with knowledge of the matter.
Coming up on the show, French government on the edge. We'll bring you the very latest on the political turmoil from Paris.
And BlackRock's Amanda Lynham will join us later in the program as credit spreads still grind to record tights. All of that to come on your brief this morning.
Is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bloomberg Brief, we're back together again. Danny Berger and myself, Manus Crenny in New York. Pressure on the French assets this morning. The euro's dropping. The president of France's far-right National Rally has vowed to sink the French government unless there is a miracle budget for next year. Now, that pledge comes as the country's finance minister told Bloomberg he refuses to accept Marine Le Pen's demands for budget changes.
The French government doesn't take ultimatums. It's looking at the French parliamentary debate. It's respecting each and every parliamentary debate that leads to an evolution. We will take into account what is changing, but we won't be blackmailed. We are committed to reduce the deficit.
Let's get a little bit more from our very own Caroline Conan in Paris. Caroline, good to see you. So this impasse, Marine Le Pen, she is the queen maker, to say the very least. What scale of miracle needs to happen to close the gap between her and Barnier?
More concessions from the government on the social security budget, more concessions on pensions. She wants pensions to be raised for everyone as soon as January. More concessions on drug reimbursement. She wants Barnier to abandon this plan he had in his budget to reduce the reimbursement for some medicine. Clearly, you heard from the finance minister, my exclusive interview with Antoine Armand yesterday in Paris. The government is not exactly ready to make additional concessions because they've already done some on prices of electricity, for example. And all these concessions they've already made is already costing the French budget as much as 10 billion euros out of the 60 billion euros they had planned of savings for next year. So the National Rally of Marine Le Pen has given Barnier's government until 2 p.m. UK, 3 p.m. French time, 9 a.m. New York time today as a deadline to say whether she will or not support a possible vote of no confidence that could possibly make the French government collapse as soon as this week.
But no government official wants to be the one that invokes the ire of this bond market, where, of course, brought back to memories of Liz Truss. And Le Pen risks being that person by forcing this no-confidence vote. So what are the thresholds that we need to keep mind of to see what could ignite the ire of the bond vigilantes?
That's right. And in fact, what Marine Le Pen really wants is for the government to actually say that they respect the far-right electorate, these 11 million French people who voted for the National Rally in the last elections, and that they have made some concessions thanks to the National Rally. But obviously, politically, that is not something that the Prime Minister Michel Barnier can say. So we'll see how this pans out this afternoon, whether we actually have a vote of no confidence in the next few days. If it doesn't happen this week, then there is another deadline, which is the week before Christmas, where Michel Barnier has to pass the overall budget bill and potentially face another vote of no confidence by December 20.
Caroline, thanks so much for joining us in a really fantastic interview over the weekend with the finance minister. Bloomberg's Caroline Conan. Let's stay in Europe because Stellantis shares dropping by more than 8% in Italy this morning. The CEO, Carlos Tavares, has stepped down after a dispute with the board over how to reverse the car maker's weakening sales and a stock slump, which, again, continues this morning. Bloomberg's Oliver Crook joins us from Berlin. Oliver, the auto industry in Europe, it's not just Stellantis. It is a problem for the country as a whole. So when we look at the CEO stepping down, how much of this is a Stellantis problem versus an industry problem?
Yeah, so Danny, we really have everything here on the menu for what's going on here at Stellantis. There is, of course, a industry-wide issue that is basically no one is spared from, whether it's in the United States, but particularly within Europe. And then you have some Stellantis-specific issues. And listen, we went pretty quickly at Stellantis from unanimous support of the board to basically creative strategic differences between the board and the CEO, which ultimately led to his resignation pretty abruptly yesterday. This was not a total shock in the sense that there's been a sense that sort of Stellantis has been staggering forward ever since that profit warning back in September, really trying to right the ship. At the time, there were discussions of potentially that Tavares might not make it, but he quickly got rid of the CFO, he got rid of the COO, got rid of the brand heads at Maserati and Alfa Romeo, really to try to stem that conversation, but that has obviously come to a head. I think that for the analyst community and for traders today, there is a question as to why you have to do this right now when you already had a CEO on the way out. Could you have waited a little bit longer for this to be a slightly tidier transition? And also the fact that we can't ignore that investors also kind of like Carlos Tavares because he was very, very strict on cost cuts. He was really cutting costs to the bone. You talk to other people in the industry, other executives, they were sort of in awe about how much he was able to cut costs over at Stellantis, though of course his critics would say that that went sort of too far, and as a consequence you had quality issues, and you saw that really represented in the main issue for Stellantis, where sort of Germany has a China problem, Stellantis had a US problem. They had about 12% of market share in the US market at the beginning of last year. They've fallen down to about 8%. The next CEO needs to deal with that.
Well, it's certainly taken a tumble this morning. I mean, the US car dealers accused them of being reckless in their short-term decision-making. That's part of the argument with Carlos Tavares, is that great cost cutter, but did he have the major plan for the future? Oliver, thank you very much. Oliver Cook in Berlin on the latest on the auto industry in Europe. Coming up, Hunter is off the hook. President Biden pardons his son after previously stating he would not use his executive powers to aid his family. More on the story right here on Bloomberg Brief.
Behind the bright lights and adrenaline of pro sports is an equally exciting world of negotiations and deal making. That's what we cover each week on our podcast, The Deal. I love the fact that you have, we say the cojones, but I can't say that in Bloomberg.
Maybe moxie?
Yeah, moxie. I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Billie Jean King.
Well, what should I learn? What should I do? I said, learn the business.
Jay Williams.
You're an asset, but how do you become the principal?
Paul Rabel.
We're going to be the league of digital, and that's why you're going to invest.
Adina Friedman.
I definitely am competitive.
David Rubenstein.
People don't come up to me on the street and say, let's talk about this private equity deal you did recently. No, nobody does that. They say, let's talk about the team.
And so many more.
You give me a clap?
No, I Ready? Go.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure. Don't miss Bloomberg's interview with the
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
It's your Bloomberg Brief. Danny Berger and Manus Cranny together in New York. So President Biden has announced that he is pardoning his son Hunter after previously saying that he wouldn't use his executive powers to help him. The president wrote in a statement, quote, "I believe in the justice system, but as I have wrestled with this, I also believe raw politics has infected this process and it led to a miscarriage of justice." Joining us now is Bloomberg's Kevin Whitelaw. Kevin, it's usually a complaint you hear from Donald Trump that the Justice Department has been infected with politics. What does this turn mean to have President Biden pardoning his son, by the way, which is an incredibly sweeping pardon, and using the same justification?
Well, that's right. I mean, I think it has a lot of Democrats worried that it's going to make it that much harder for them to try to, keep the guardrails on a second Trump presidency. And indeed, it does sort of get to the idea that that you've heard from not just Trump, but a lot of the people around him, and including some of the folks he's naming to sensitive positions, that the Justice Department had been sort of weaponized in various ways. The irony, of course, here is it was it was Biden's own Justice Department prosecuting his son, which actually showed that there was up to now really some separation between the White House and the Justice Department in the traditional way that has been the case for a number of years in the United States. It's also very clear that Donald Trump has suggested that he wants to change that. He wants the Justice Department to serve the political aims and perhaps even go after some of Trump's own enemies. And that's where I think you had President Biden say that he had decided that he had to make a decision that he originally had ruled out.
Well, the breadth of this can't be underestimated. I think in Politico they said they haven't seen a breadth of pardon like this since they saw in the wording of Nixon, and that was in 1974. Over the weekend, we saw Justin Trudeau get on a plane, come to Mar-a-Lago. I mean, this is a very big shift in terms of how to deal with your neighbor before he even sits in the White House. How much was discussed around tariffs, or what was the commitment that Trudeau has made perhaps to ward off the worst case scenario? This is about border patrol, isn't it?
Yeah, I mean, look, Donald Trump is trying to see whatever he can get and whatever kind of negotiation he has. And so, the Canadian Prime Minister went and basically did his best to try to say, hey, we're not part of the problem. We're going to do what you want. We're going to make sure that we're taking on the border more. It's not really clear that what's actually going to change, but a lot of this is for Trump being seen already making a difference, and so you already have an effect that the transition to the next administration is sort of accelerated because Trump's already having these state meetings, having these sort of negotiations and claiming successes. He's done that with. After a conversation with the Mexican president, he's essentially doing that as well with the Canadians.
Okay, thank you so much, Kevin, for being with us. Summing the political machinations of the weekend, Kevin Whitelaw. A quick snapshot on currency. We know the euro is under pressure. We just had a conversation, Danny, with Valentin Marinov going, don't be just so dour on this because he sees a lack of contagion into the rest of the market. But it certainly looks like Marine Le Pen is the queen maker in Paris. She can choose whether to sink this government, but as you rightly said, does she really want to be famed as being the Liz Truss of France? If she calls that no confidence vote and goes through with it, that is like a sword of Damocles across politics.
No politician wants to be that. Euro at 105 this morning. Again, Valentin saying that all the bad news is maybe already priced in. Coming up, we're going to catch up with BlackRock's Amanda Lynham. Talk a bit of Europe with her, too.
in 2000, post-Napster, generally everybody wrote off the recorded music industry, including the investment community. And I didn't mind that chapter because then I got left alone. And actually, I think out of that period, we started to create better art because the pressure wasn't on from the technology to be the most powerful chapter. And then iTunes came in, and iTunes, to Apple's credit, did have a boutique taste mentality about the store, which meant that I think they understood. I can tell you from that period that the artists that came through were of a very high quality because it was encouraged to be boutique. Now, ironically, this chapter has made us more money times 5 than the iTunes chapter and the post-Napster chapter. But an algorithm tells you what you want, not what you might like. And there's a difference between what you want, but with streaming, the downside is you have incredible penetration, and we have hundreds of millions of people around the world. And so that has been very lucrative as a business.
From the world of politics to the world of business, Joe Matthew and Keely Lines deliver news, insight, and analysis live 2 times a day every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
From our global headquarters in New York, welcome to Bloomberg Brief. Danny Berger alongside Manus Cranny. Let's set your agenda.
King dollar marches higher. President-elect Trump demands BRICS commitment on using the dollar. Euro under pressure. France's far-right party threatens to sink the government amid budget concerns. And Stellantis craters as the CEO Carlos Tavares quits early. Meanwhile, Tesla ramps up the discounts in China. Danny, good morning. Welcome back.
Thank you, Manus. The Thanksgiving break is over. You're greeted by equities selling off in the futures market. Russell 2000 unchanged, but both S&P and NASDAQ down 0.2%. That comes off the back of the strongest U.S. monthly performance of 2024, ending the week with another record high. For this bond market, it is a busy week. You get appearances from Powell, Lagarde, capped off by Jobs Day on Friday. Yields go higher by 4 basis points across the curve. The euro, meanwhile, falls, weakens by 0.6%. We're at 105, kneecapped by not just economic and auto issues, Manus, but also this morning, the latest drama playing out in France. The prime minister threatened with a no-confidence vote by opposition lawmakers over the budget.
Yeah, and I think the point that you made this morning, which is, does Marine Le Pen, she may be the queen maker in terms of politics and fiscal probity in France at the moment, but does she really want to be the one that brings down the government and blows out German-French spreads beyond where they were in 2012? In 2012, it was Mario Draghi who?
Yeah, it was his whatever it takes moment. Yeah. It's remarkable that we've come all the way back to that, and that France at the moment is contending with yields that look like Greece's. I mean, this is the ultimate insult for Europe, right? And so we're in this situation where there's concerns about European weakness. BlackRock's Amanda Lynham weighs in writing this. Elevated trade policy uncertainty has the potential to weigh on investment in the euro area, but the relatively resilient performance of euro credit, corporate credit rather, has not reflected a weaker euro area growth backdrop. Amanda joins us now. She's the head of macro credit research at BlackRock. I mean, Amanda, it's like the storm of all storms for Europe. You have trade concerns, which you point out. You also have the economic weakness. You now have more political discord in France. At what point, if at any point, does this impact the corporate credit market?
Good morning. Thank you for having me. It's so interesting. The growth divergence, the political uncertainty, that has existed in Europe for a while. I think what's really, I think, important to watch is that just the idea of trade uncertainty, not necessarily implementation of trade tariffs, has the potential to weigh on euro area investment. There are a few things, though, that are keeping European credit holding in rather well. I would say, as you noted at the start, European credit hasn't underperformed the U.S., and within European European credit high yield has outperformed IG. So the European credit market is not sending you a signal that it is concerned about growth. We have a different rating skew within European high yield, a bit higher quality. It's a smaller market, so not a ton of bonds to go around. That's a technical tailwind. And then I think what's probably not discussed enough, but is still a very important consideration, the European Central Bank still owns a large chunk of the European IG market, even though the corporate securities purchase program has ended, and even though reinvestments have ended, they still own a fair amount of stock of bonds. And so what that is doing is that it's providing some technical support to the European credit market and possibly incentivizing investors to move down in quality, even though the ECB holds IG credit.
Well, then the Achilles heel in this, I mean, if you add insult to injury, if it's political woe, it's spread woe, you then have potential tariff woe to come. Now, you talk about that impact in the US, and we'll talk about that in a moment, but the tariff impact, the risk of tariff, how does that have a longer-lasting impact in European credit?
President Lagarde had noted that the European area is an open economy, so trade is obviously very important. They're very focused on downside risks to trade uncertainty. There are certain sectors that we're watching very closely. Autos is among them. This is part of the reason, actually, that we like financials. We like it in the European market and in the U.S. market because it's a services-based industry, not sending a widget across international waters. Now, there are certain political headwinds that are weighing on French banks, for example, overnight this morning in terms of the price action in the equity market. But in general, we like financials as a sector. To your point, Manus, I think it's just really important to do the granular bottom-up credit selection, because actually when you look at what a lot of these companies are saying, depending on where their supply chains are, how they're sourcing products, what sort of resilience they've built in over the past several years, for example, it actually is a very much a credit picker's market as opposed to a sector play.
Do you see that happening now of investors looking at supply chain exposure and maybe shunning certain parts of this credit market?
For sure, and you actually see it coming out of the earnings. So the earnings that have been announced specifically from the retail sector over the past few weeks, actually companies are talking about the steps that they've taken over the past several years to shore up their supply chains, build some resilience. And instead of supply chain efficiency, it seems like the focus has been over the past few years, even with the pandemic, supply chain resilience. And so maybe paying up a little bit more to build that resilience into the supply chain. I think the pandemic shined a light in a lot of areas of kind of open gaps in supply chains that became problematic when the economy experienced a sudden shock.
Let's just pivot to the US, Amanda, because the one thing that you say is underpriced is the risk of boomerang tariffs from the rest of the world. You see Canada, you see Trudeau in Mar-a-Lago over the weekend, you see Sheinbaum on the phone with him last week. So there is a longer tail for credit in regards to the risk from boomerang tariffs from elsewhere in the world.
That's right. The worst case outcome for corporate credit is a scenario where you have across-the-board tariffs coupled with retaliation, such that the tariff is no longer a one-time price level shock, but has the potential to kind of feed upon itself, especially if it's coupled with labor shortages, for example, that are pushing wage costs higher. And I think that second round effect becomes somewhat problematic in that scenario for two reasons. One is it may change the path of forward monetary policy. The second is there would be, in that case, a risk that corporates start to use layoffs to protect their margins. And think about where we are in the U.S. right now. Corporates haven't been really laying off workers to that large extent. You've seen the layoff rate remain pretty low. That's helped keep the consumer really strong, and the consumer generates 2/3 of U.S. GDP. So if you do have weakness in the corporate market such that they're focusing on layoffs, that has the potential to allow that weakness that is right now contained to the low-income consumer in the U.S. to spread more broadly. And I think that's really where we become concerned at the macro level.
How do you understand how quickly that could happen?
I think really paying attention to the company level commentary is going to be really critical. Right now, companies are telling you that they actually don't have a lot of clarity on the go forward. I think that's fair, right? But I do think similar to the pandemic, when the companies were talking about their expectations for supply chain normalization, it was actually much longer than what the market was baking in. So I think we can look to micro level commentary over the next few quarters to give us a gauge on how close corporates are to flexing that layoff tool if they they need to protect their margins. That will really be critical, again, because we need to keep the U.S. consumer in aggregate resilient in order to contribute to the resilience of the overall economy. And going back to corporate spreads, which is where we began, really it's been growth, and especially in the U.S., that has allowed credit spreads to reach new cycle tights over the past few weeks, and that will be critical going forward in the U.S. market. In Europe, it's a little bit different. As you know, that growth backdrop is a bit weaker.
What impact, I mean, Scott Bessent, 1 week ago, we had this sort of Bessent bounce. Danny was on vacation, we had the Bessent bounce, the bond market rallied, and there was a nice trickle-down effect. We saw this euphoria within credit, one could say. But if you look at his promises, 3% deficit, a deficit of 3% growth via deregulation, and 3 million barrels, or the equivalent thereof, in energy. Again, what is the trickle-down effect of that into credit? Because that gives you a very, very different U.S. economic landscape.
3% growth would be welcomed by credit. That would be an above-trend pace of growth, and that would be something that the credit market, I think, would view favorably, because it would allow corporate credit to navigate structurally higher interest rates. Even though we see some scope for the Fed to cut in December, we're expecting a landing zone or a terminal rate that is above where we've been over the past 15 years. And so structurally higher rates coupled with above-trend growth is a recipe that corporate credit can digest. I think in terms of lowering the deficit, that would also be welcomed by the bond market. One of the risks to corporate credit is a disorderly sell-off in treasury yields, as we've been saying.
Well, let's see what Doge and let's see what Bessent actually manages to produce. Amanda, always great to get your take.
Thanks for having me.
Good to see you. That is Amanda Lynham there of BlackRock on the markets. Coming up, Stellantis shares under pressure, to say the least. The CEO surprised resignation. More on the auto sector coming up on Bloomberg Brief. Good morning from New York.
It's the world's second largest economy, with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
In case you missed it, on Bloomberg Technology.
We are very focused on playing one game and one game only, and that is being free, frictionless entertainment for consumers. But what I will say is we are doubling down on the strategy. We believe it's working. We think the tailwind's in our favor, and it's on us to continue to deliver.
Whenever you're doing something innovative that hasn't been done before, there's a lot of trial and error and iteration. It just always has these zigs and zags along the way, and I think where we've been successful is really being reactive.
Hollywood is the history of technology. Like, we are here because of technological breakthrough, right? And so we sometimes forget that art and technology kind of like come together always. And for us, it's like demystifying a little bit the technology. Again, if you understand AI as a tool for humans, then it changes the narrative. And it's less about fearing it and more about embracing it.
Don't miss Bloomberg Technology, live every weekday.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States. Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
It is Bloomberg Brief. I'm Manish Kani in New York, alongside Danny Berger, President Biden, has pardoned his son, Hunter Biden. This after previously saying he would not use the executive powers to do so. And the president wrote this: "I believe in the justice system, but I have wrestled with this. I also believe raw politics has been infected by this process, and it has led to a miscarriage of justice." Kevin Whitelaw is with us. Kevin, good morning to you. So this is a significant U-turn by Biden. It is the breadth of the pardon that is perhaps most in question this morning. Politico saying this is the broadest pardon that they've seen since Nixon was pardoned in the 70s.
Yeah, I mean, it's the breadth of the pardon, but it's also just the fact that obviously Biden had spent months saying he wasn't going to do this, that he was going to trust in the justice system, and now he's obviously changed his mind. And I think a lot of that is looking at the incoming Trump administration, the kind of people that are being appointed or nominated for key positions, the sort of loyalists, a number of whom have made it very clear that they want to use the machinery of government to go after their political enemies and go after people that they think wronged them. And so, you know, you already have an administration, an incoming administration that's talked about what they see as the politicization of the Justice Department. They feel it was unfairly turned against Donald Trump. Here you have the sitting president also saying he felt that things got politicized. Ultimately, the concern, I think, from a lot of people is all of this is doing damage to the institution of just sort of law enforcement and the justice system and what are supposed to be career prosecutors who are independent from politics. That seems to be eroding and eroding very quickly.
Kevin, are you referring in any way to the FBI pick that we just got in Kash Patel, someone who had been critical of the plea deal that was reached with Hunter Biden?
Yeah, I think you look at that. I think you even look at the aborted effort to appoint Matt Gaetz as Attorney General. But these are folks who have talked about using the weaponry, using the machinery of government as a weapon, and have talked about wanting to go after people that they thought wronged Donald Trump or wronged Republicans. And so, you know, I think Biden looked at that and had to say that this was, you know, obviously just something that as a father, he was worried about sort of where his son was going to be left. Unfortunately, these Democrats, unfortunately for Democrats, that leaves them in the position of now trying to figure out how do you talk about these institutions, rule of law, what their traditional separation is supposed to be between politics and the legal proceedings. How are you supposed to talk about all of that in a Trump administration in the backdrop of a pardon like this one?
Well, John Bolton had a few scathing remarks. He compared the appointment to almost like Joseph Stalin's secret police, and that it should be rejected. Very quickly, Justin Trudeau came to Mar-a-Lago over the weekend. What did he promise Trump, president-elect, that he would deliver?
Well, you know, I think obviously he talked to the president about tightening border security, and then, you know, went back home and said that there's going to make some announcements about some significant enhancements, so what they called to the border. You know, I think this is just very much an effort of everybody to be seen responding to Donald Trump and what he wants, to give him the kind of symbolic victories that he's looking for. Until we see the details, we're not going to really know what that means, as to how much is actually going to change. And it's really unclear how much that even matters to Donald Trump. How is he looking for actual things on the ground, or is he happy to take the win and to already, you know, have this impression that's going on of how the administration has almost already begun, even though the inauguration is still quite a ways away.
Okay, Kevin, we appreciate that update. That is Bloomberg's Kevin Whitelaw. I want to get you a check on Stellantis shares this morning, down by 7% in the Italian trade. It is off the lows, but still under pressure. The CEO, Carlos Tavares, resigning after a dispute with the board over how to reverse the car maker's weakening sales and a stock slump. Joining us now is Bloomberg's Oliver Crook. Oliver, this CEO had been someone who had thrown many things at the wall trying to reverse the fortune of Stellantis. What happened that he could no longer stay on board?
Yeah, and really someone that's been known to sort of turn around very difficult, complex companies. He's been CEO of Stellantis since basically Stellantis came into being back in 2021 with the merger of PSA, Peugeot, Citroën, and FCA, Fiat Chrysler, and he's been running the company, ever since, and has spent his entire career within this industry. He's really been known for sort of running a very, very tight ship in terms of cost. He was also paid a lot of money. People joke the kind of private equity approach to sort of running car companies, and many of the executives that even I spoke to in the German car industry, they were sort of in awe. They were a little bit incredulous as to how he was able to sort of cut costs all repeatedly. And, this is something that basically all of these companies are looking to do right now. There's perhaps also, Danny, a sense that he has pulled that lever. They shot the cost-cutting bullet, and that has been already sort of manifested around Stellantis. While these other car companies now still have that sort of dry powder of trying to bring those costs down, maybe they no longer have that over at Stellantis. What you also have for the other German car makers, you have the China problem. That is not what Stellantis has. What Stellantis now has is a U.S. problem. They had a huge bloated inventory. Part of the sort of criticism of Carlos Tavares was that he had cut too much, and that as a consequence, there was a lot of brand damage done to some of the key brands like Ram, like Jeep, and so you saw that in basically very bloated inventory over in the United States. And what the next CEO is going to have to deal with is looking at a picture where about a year and a half ago, you had about 12% of the U.S. market share held by Stellantis. That has fallen down to about 8%. So these are some of the issues that are specific to Stellantis that are stacking up, and what has ultimately led to a CEO being, the disagreement maybe pushed out early when he was supposed to leave at the beginning of 2026.
Well, a lot of the European autos are grappling, Oliver, with what to do with their electric vehicle, this transition, and not just Stellantis, but you look at VW, and I'm looking at the history of strikes there. They're about to go on strike. The last major walkout they had was 2018 with 50,006 factories. Volkswagen have set fire to our collective agreements, is what IG Metall, the union, are saying. How quickly can this escalate into something much more colossal? This is about timing. Germany's under pressure, and Volkswagen workers are striking hard.
Absolutely, Madison. I'll pick up on a couple of those points. So what we should say is that these are basically tactical warning strikes. These are sort of the appetizer to the sort of full-blown UAW kind of strikes that we saw a year ago with the big three over in the United States in Michigan, right? This is just sort of tactical where they do sort of a couple hours here and there, but there are strikes across all the factory, and this is the workers saying, basically, this is what we're capable of. We can really bring a lot of issues for you over the VW management board. What VW is trying to do is close up to 3 factories. We're talking about tens of thousands, potentially, of job cuts. They're talking about pay freezes for 2 years. They're talking about 10% pay cuts across the entire company. So this is what they're pushing up against. But as you say, Mattis, timing is everything. We are in the full-blown election campaign here in Germany. So you have this sort of tension between the corporate side and the workers, both of whom are going to try to be getting concessions out of the government as they're trying to get back in and go to this election being held in February.
Okay, Oliver, thank you very much. Tracking the story there, Oliver Cook in Berlin. Let's stick with the auto sector. Tesla and BYD, they're boosting their incentives and the discounts in China to help meet their annual sales targets before the year end. Tom McKenzie is tracking the story. We had a lot of promises that we were near the end of these incentives and the price cuts, and that things were good in China, and they didn't need to dig in any harder. What's happened?
Oh, well, they're digging in, Manus, and certainly that Model Y Tesla that you've had your eye on, you might want to hot-foot it to Shanghai, because now you can get a 0% loan for 5 years, Manus, and a discount of $1,400 US. Look, it tells us, as you say, about the health or lack of health of that Chinese economy, but also about the competition within that market, because it's not just Tesla pushing through these discounts, but it's also the likes of BYD, and they are expecting to ship more than 4 million vehicles this year. In fact, just last month, they increased their sales in the single month by 70% from the previous year. BYD now have about a third in terms of the market share of shipments in that industry and ecosystem that is China. But you're also getting discounts coming through and those 0% loans coming through from the likes of Li Auto, Xiaomi as well. Interestingly, you were talking to Ollie about Stellantis, their partner in the Chinese market, Zhejiang. They've already come through with their own targets, beaten their targets for the year, 250,000. But it's a reminder of just how competitive this space is, the number of incumbents, but then the upstarts as well, and the challenge of cutting through in an economy that faces those broader challenges and broader headwinds.
Tom, while we have you, about 50 minutes ago, the U.S. announced more chip bans for China, this time on AI memory tools. What's different in this and what we've had before?
So you've got about 24 pieces of manufacturing kit that will now be restricted from the Chinese market, 3 pieces of software, and you have about 140 entities in China added to the blacklist. We'd had the lobbying from the likes of Lam Research, from the likes of Tokyo Electron over in Japan, from the likes of ASML in the Netherlands against the most severe form of these restrictions. They want to continue to have access to the market. The US administration, the Biden administration coming through with these details, further restrictions saying they want to ensure this technology, particularly with the focus on the build out of AI, does not enhance China's military capabilities and its ability, as the US would perceive it and characterize it, to crack down on human rights. So probably on the surface a little less severe than some of the restrictions that had been expected by some in the industry, but certainly a ramping up of the ability for this administration stateside to restrict access to some of these key materials and software in terms of the build out of AI for China.
Tom, appreciate it. That is Bloomberg's Tom McKenzie. Okay, coming up on the show, we're going to set you up for your trading day on this Monday. That's on your brief.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers.
Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
It's your Bloomberg Brief. Danny Berger, Manus Cranny in New York. Let's set you up for your trading day today. ISM manufacturing data, that will come out at 10 a.m. Eastern. We're also going to hear from Fed Governor Chris Waller and New York Fed President John Williams, 3 p.m., 4:30 p.m. respectively. And President Biden is on his final overseas state visit. As a president, he'll be in Angola until Wednesday. Manus.
Danny, it is all about the, I suppose, fealty to the dollar. There is no alternative. That was the message to the BRICS. But euro dollar is on the back foot this morning, down by 0.5%. And the bottom line is, will Christine Lagarde, will Marine Le Pen sink the French government? Does she really want to have that responsibility, possibly a no confidence vote? If she doesn't get what they want, national rally in terms of this fiscal argument in the budget.
A Freudian slip of who actually controls.
Freudian slip.
Who actually controls the euro at this point? Is it Le Pen or is it Lagarde?
Yeah, to be fair, it was actually Christine Lagarde and Ursula von der Leyen who urged checkbook diplomacy. Christine Lagarde last week said, get your checkbook out. If you're going to deal with Donald Trump, get on side with his tariffs. And we saw this over the weekend,
But
didn't
this
we?
is the thing. What do you focus on? Do you focus on the stutter tariffs or do you focus on Friday when we get jobs data, the first jobs data since that negative imprint from private payrolls impacted by the weather? So we first have to get through a Fed decision before we can even contemplate what tariffs will change to the picture.
And all of the central banks have got to consider that. We had a conversation with Valentin Marinov this morning, and he basically said a lot of the bad news is already in the euro because there's no contagion to the rest of the bond markets. But the surveillance team, they can debate that for you over the next couple of hours.
You need to watch this if you struggle with getting your startup noticed. This Black Friday, seize the chance to shine. For just £200, you can showcase your startup to over 25,000 venture capital and angel investors. Submit a 3-minute video pitch and gain unparalleled exposure with your contact details included for direct follow-up. Your pitch will be broadcast several times daily for an entire month, ensuring maximum visibility. And that's not all. Your product will also be featured on our live streaming channel, which boasts over 100,000 daily views and broadcasts at least 10 times per week. Imagine the possibilities. Consistent exposure to investors actively seeking new opportunities. Venture capitalists provide large capital and strategic guidance, while angel investors offer early-stage funding and mentorship. This promotion connects you to a broad network, enhancing your chances of securing the perfect investment for your startup. Don't let this opportunity slip by. With just a small investment of £200, you can propel your startup to new heights. The submission process is user-friendly, making it easy for startups of all levels to participate. So what are you waiting for? Submit your 3-minute video pitch today and take the first step towards securing the funding and connections your startup needs to thrive. This limited-time Black Friday offer is your ticket to unparalleled visibility and growth. Act now and watch your startup soar.
Are 3 fundamental things. Number 1, they do everything in teams. Their operations, their patients they see.
My general advice is continue to seek out companies or people that are maybe 1 stage or 2 stages ahead of you. And I think this is generalizable to not just to startups, but anyone seeking fast growth in their own professional lives, in their careers too. What does greatness look like? Try to seek out people who've been there, done that before, and then try to not connect with one, but try to interview 3, 5, 10 people to see what is a general pattern of greatness that look like that will get you to the next level of the company, next stage, maybe a year, 12 months from now, 24 months from now. Seek out people who kind of went down that path a few times. Then you'll start to find this pattern that start to emerge. What are things that you need to have 12 months from now, 24 months from now that you currently don't have? Then try to build a path towards that. It's almost like Amazon's or Jeff Bezos' mantra of working backwards. Think about what your end game or next stage look like, and then figure out your steps to getting there, and who do you need to work with, upgrading or coaching your existing team or recruiting from somewhere else to really level your leadership. Because ultimately, the job of a CEO is to do 3 things, right? One is get the strategy right for your company, making sure it's executed, get the right teams onboarded, getting the resources, whether it be fundraising or allocating your resources. So it's strategy, people, or team, figuring out how you need to navigate those things to get to the next level.
When I was younger, I used to be in bands. I'd play drums in bands and toured America with them. Did a lot of session drumming, recorded albums. So yeah, it was good fun doing the drumming. The reason I stopped it, well, I still play, but not as serious as I did when I was younger. But drumming doesn't pay the bills. I was never good enough to be able to pay the bills with it, but it was good fun. I started RJF, and the reason I started it was I saw a gap in the market for particular early stage and startup businesses. With the experience that I've got of running businesses, of being a finance director at the very biggest companies in the world to being finance director of small startups, we were looking at providing more than just basic accountancy services. So yes, we'll do all that, we'll do all the basic, all the statutory side of things that you need to do. But there's so much more value that we can add, and I wanted to have my experience to help these startups, because a lot of them don't really know where to go. You can go to your high street accountants and they can do a good job compliance-wise, but you would question whether they've actually been in the firing line of a business. Have you been in a business where you're thinking, how do I pay wages next week? Or business is really successful, what do we do with it next? Or how do we grow it? How do we grow into international territories? Or how do we grow our markets? How do we expand? So a lot of the experience I've seen over the years and seen different types of business in different sectors, I thought, well, it's a real value that I can add to these businesses as opposed to just being an FD, because a lot of these businesses can't afford an FD. But if we can take care of their statutory side of things, the compliance side of things, I'm on hand to be able to help and advise businesses with their growth strategy, or if they're in difficulty, help them through these times.
I will show you how to get the best funding for your startup idea. Let's get started. Here's the deal. If you have an amazing startup idea and need funds to fuel it, we're here to help. Simply send us a video where you explain your idea. Make it clear, concise, and compelling. Hook us in with your passion and vision. Don't forget to include your contact details so investors can reach out directly. This is your chance to shine and get your idea in front of people who can make it a reality. Imagine turning your startup dream into a thriving business. It all starts with that one simple step. So what are you waiting for? Grab your phone, hit record, and let your idea fly. The future of your startup could be just one video away. Remember, be clear, be passionate, and most importantly, be you. We can't wait to see what you've got. Let's get funded now.
With the group photo, did you see the group photo?
Yes, I did.
With a child in the background making the moose face?
That's correct. It seems about how we all feel
enjoyed that as well over the weekend. From New York, welcome back. I hope you're having a wonderful Thanksgiving here stateside and a long weekend as well. Equity futures as we wake up Monday morning, just a little bit softer. We're down by almost 0.2%. In the bond market, Lisa was talking about yields. Yields were a little bit higher today, up by 4 basis points. The 10-year 421.10. Coming up this hour, we'll catch up with Cameron Dawson of New Edge Wealth, expecting the rally to continue. Terry Haynes of Pangea Policy on Trump's warning to BRICS nations, and Tom Narayan of RBC as the CEO of Stellantis steps down. We begin this hour with stocks at record highs following the best month of 2024. Cameron Dawson of New Edge Wealth writing, "Can't fight the moonlight through the end of the year. Seasonality remains strong and the trend remains robust, supporting markets continuing to press higher through December." Cameron joins us now for more. Cameron, good morning.
Good morning.
And a belated happy Thanksgiving. It's good to see you.
Happy Thanksgiving.
How much momentum do we have going into year end?
Well, certainly the chase is on, and we can see that in how markets are trading with this strong resilience, still a very powerful uptrend. Now, that doesn't necessarily mean that it can continue this robustly going into 2025, but we know this seasonality just continues to drag people into markets. We have positioning that's in the about 85th percentile using the Deutsche Bank consolidated positioning, suggesting there's still more room to draw people in. Then you start to have to contemplate when you hit January, February, stretch positioning, stretch sentiment, stretch valuations, stretched earnings expectations, but that's probably a 2025 problem.
Not too stretched, though, based on what you've said and what we've seen so far. In November, the scores up 5% on the S&P, NASDAQ 100, similar move. The Russell up double digits, up almost 11%. Can that move continue? Maybe not at that pace, but can the outperformance, relatively speaking, on the small caps continue?
It has to be supported by earnings. Nowhere in this market is there a higher bar for earnings in 25 than small caps. You have 50% growth based on current consensus. So right now, this is all about a positioning chase. People being underweight small caps, having to show by the end of the year that you're at least neutral. The question is, once you get to neutral, and you have seen those flows into small cap ETFs be aggressively strong, that does set you up with that high bar of earnings, and you really have to deliver. Also note, small caps aren't that cheap. You see them trading at about 27 times forward on the Russell 2, which we know is skewed by unprofitable companies. But I think the point is you have to see the earnings deliver. But for now, we're in that moment of the suspension of disbelief.
Suspension of disbelief, which could potentially go through December because of the holiday spirit and the fact that December tends to be a good month. Did we learn anything about consumers over the past 4 days other than the American is still the ultimate consumer?
Well, we see this consumer being extraordinarily strong. I braved the outlets in Orlando on Black Friday and saw lines out the door, 100 people deep, to get into luxury stores, which just suggested that the consumer still has this willingness to spend. Now, I think it's misleading to talk about the consumer in aggregate because we know that they are so bifurcated between the lower income and higher income consumers. But the higher income consumer simply punches above their weight. They make up double their weight in the overall path of consumption, which just is to say is that because that consumer still remains resilient, they're less sensitive to inflation, less sensitive to interest rates, they've been the one pulling this higher. The question is, can that momentum continue in 2025?
There's also this question about the Trump trade and whether it's the same this time around. John was asking about whether small caps can continue the outperformance, and I was looking at a study over the weekend showing that actually smaller businesses are more likely to be affected by tariffs negatively than some of the larger businesses because they don't have the heft to negotiate. So you have to wonder if the Trump trade is really going to have the same kind of contours as it did back in 2016, because we're at a very different starting point.
Unless we forget that yields are that much higher. And that is the key other part of the small cap trade, which is that there is an implicit expectation in small caps being strong of yields coming down because of refinancing, because of the degree of floating rate debt on those balance sheets. So if you are in a world where tariffs do keep inflation higher, at least for goods prices, then you are in a scenario where you have yields that remain higher for longer, the Fed maybe not cutting as much, and then you have to question that it's not just about the income statement for small caps, it's about the balance sheets and the issues you could have with balance sheets if interest rates do stay higher.
So this gets us to CPI and the payrolls report as well. Let's start with inflation. Do you see good reason to continue to bet on moderating inflation through 2025?
If we look at the big buckets, at least today, of wages that continue to look like they are moderating, look at leading indicators like JOLTS, look at housing prices. Those in the active, the current rent indices don't suggest a reacceleration there. Then the wild card is energy prices. And energy prices falling have been the key boon for consumers over the last 2 years. You're out of the point where they're falling down 20% on a year-over-year basis. They're about flat. The question is, do they move higher? And that would be the key question mark going into next year, is that can you continue to see energy prices be a tailwind?
The key question going into December 18th is whether the dots in the dot plot move higher as well. Yeah. How does the S&P change in 2 weeks' time?
Well, we think the dot plot's going to be relatively hawkish because you have about 100 basis points of cuts marked down for 25 in the September dot plot. So we think that they are going to cut in December unless we hear from Powell and he says something different, or we hear from the Wall Street Journal and they say something different. But we do think that that dot plot will show fewer cuts. We're thinking 2 cuts likely over the course of 2025. And then the S&P raises the question of what do they do with growth? Growth has remained more resilient. There could be upside to the GDP forecast. And then likely see some stickiness within inflation as well, because if you look at the S&P, they have 2% kind of going out over the course of the next few years. We're seeing inflation remain stickier, which just suggests that that has upside as well.
So no one's listening. Why do you think Jay Powell is actually speaking on Wednesday? Because this is sort of new, right? It kind of came out of the blue. They agreed to speak at the Deal Book conference. So what's he going to say?
I have no clue.
Oh, come on. Like, just come on, extrapolate out. I mean, honestly, there's sort of this slew of different Fed speakers. And I'm just wondering, okay, what are they going to speak? What are they going to talk about? I mean, they've been talking all this time, right? Waller, Williams, Goolsbee, Kugler, Powell, Moussalem, Christine Lagarde also kind of getting in the mix. And I'm looking at Bowman, Goolsbee, Hammack, and Daly. They're all lined up. So what are they going to say?
I think that they are going to acknowledge that this need and urge to get down to a phantom neutral rate, whatever that rate may be, has a lot less urgency given where economic growth is and given where inflation is. When Goolsbee was talking about hundreds of basis points of cuts to get to neutral, in the face of economic conditions, financial conditions that remain near 2021 easy levels, we've been raising the question of why the urgency, why need to cut so much? So we think it'll be acknowledgement of the resilience and growth, but here's the plot twist. Economic surprises are actually starting to turn lower. That's the reason why yields are falling, we think. It's less about the narratives about fiscal prudence, but that economic surprises are starting to bring those yields lower. So it could be that they're saying everything is resilient just at the point that we start to see a slowdown in growth.
So that's what I wanted to pick up on. Is the Fed still driving the bus? Or is it sort of the economics, or is it the politics, right? We're in this sort of headline whack-a-mole. And it seems like the market's like, we got this game. We're gonna ignore the headlines because that's what seems to work this time. And so people aren't taking things too seriously when things come out, like 100% tariffs, and you're dead to me. But there's this question going forward about what the focus is gonna be for markets. Is it gonna be the Fed? Is it gonna be economic surprises? Or is it gonna be some of these political headlines?
Well, we think that economic surprises is what's going to be whipsawing the long end of the curve and the short end of the curve of that matter. When we got up to about 4.4% on the 2-year, you're effectively pricing out any interest rate cuts over the course of the next 2 years after December, which said to us that this was a market that was not pricing in or contemplating any chance of recession. And that then makes fixed income a very interesting kind of hedge, because if you're not pricing in any chance of a slowdown in growth, it means that if you're trying to hedge against a slowdown in growth, that's a pretty good place to do it. So we would watch those economic surprises really closely. That likely matters more than these rather fleeting narratives about fiscal prudence and tariffs and all of these questions about what's going on in White House South.
Bond yield bouncing this morning at 4 basis points. White House South or Winter White House? What are we going with?
I don't
White
know.
House South?
I actually would like to see the equivalent of the Oval Office in
Mar-a-Lago.
Mar-a-Lago, and I was actually looking for someone to have done that research, but I couldn't find it. So if you have it, please send it.
Cameron, it's good to see you.
Good to see you.
Cameron Dawson there of New Edge Wealth. If you are just joining us, welcome to the program this Monday morning. Equity futures down by close to 0.2%. With an update on stories elsewhere, with your Bloomberg brief, here's Danny Berger. Hey, Danny.
Hey, John. President Joe Biden has signed a sweeping pardon for his son, Hunter Biden, reversing his previous stance that he would not use his executive powers to aid his son. The president wrote in a statement, quote, "The charges in his case came only after several of my political opponents in Congress instigated them to attack me and oppose my election. No reasonable person who looks at the facts of Hunter's cases can reach any other conclusion than Hunter was singled out because he is my son, and that is wrong." Stellantis shares lower in the Italian trade, down by more than 8%. The company's CEO, Carlos Tavares, is quitting sooner than expected, with the automaker grappling with slumping profit and weaker U.S. sales. The maker of Jeep SUVs and Fiat cars will be run by an interim committee headed by Chairman John Elkann. A new CEO will be named in the first half of next year. Disney's Moana 2 broke the record for the highest grossing Thanksgiving weekend with $221 million in ticket sales in the U.S. and Canada. Frozen 2 had held that top spot since 2019. Wicked from Universal Pictures and Paramount Global's Gladiator 2 finished in second and third place, respectively. Those films brought in a combined haul of $168 million during their opening weekend, and that marks a strong start to the holiday movie-going season. That's your brief, John.
Danny, thank you. I'm responsible for about $25 of that grand total over the weekend. Gladiator 2.
Oh, I was about to say Moana 2. Didn't really take that for you.
Didn't get that far.
Okay.
Went to see Gladiator as a standalone movie. Okay, pretty decent. As a sequel to one of the best movies I think that's ever been made, fell a little bit short.
Really? You were disappointed?
Storyline was decent, but some of the scenes, we can talk about this later.
I'm
not sure there were sharks in the Coliseum. Did they bring sharks at any point? Maybe I'm wrong.
Well, come on. It adds to the drama, the joy. I'm waiting for Oppenheimer too.
Are you? Is there a follow-up to that?
Absolutely not.
What's the follow? What would the follow-up be?
I don't know. I'm just saying.
You just mean
everything
they're
is
over the
two.
top on sequels.
Yeah, come on. That's my point. This is sort of the least likely because what else could you say?
Taking some time to get up to speed, Brown.
I know.
With your humour. I apologise. Up next on a programme, Trump's warning to BRICS nations.
If there are ways, let me put it this way, that EM can satisfy and actually make the Trump administration be less of a target for them, I think they will do it because that will actually minimize volatility, allow them to get back on a better route, at least going into the next 4 years.
That conversation up next, live from New York City this morning. Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close. Welcome to Balance of Power.
This is Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Equity futures right now just a little bit softer. We're down 0.1%. In the bond market, yields a little bit higher at 4 basis points. 4.2129 on a 10-year. You'll notice the dollar strength. We can talk about that more broadly in just a moment. But the euro weakness, 105.23. Lisa, all eyes on France through the week in the European government bond market.
Yeah, Marine Le Pen essentially threatening to torpedo the government and have a no-confidence vote as soon as today because the budget is not amenable to certain aspects that she's proposed, including this idea of potentially extending and actually adjusting pensioners' salaries to inflation. It just raises this question between a rock and a hard place with a fiscal deficit of 6%, but also some of the demands coming from the political, really the political momentum right now.
At a time when Europe has some big problems. Euro dollar right now, 105.22. Under surveillance this morning, Trump's warning to BRICS nations.
You need to have stable currency in order to basically have sustainable portfolio flows in the long run. So if there are ways, let me put it this way, that EM can satisfy and actually make the Trump administration be less of a target for them, I think they will do it because that will actually minimize volatility, allow them to get back on a better route, at least going into the next 4 years.
Here's the latest this morning. President-elect Donald Trump warning BRICS nations not to create a new currency to replace the US dollar, threatening 100% tariffs if they do. Terry Haynes of Pangaea Policy writing, there are larger market opportunities now being triggered by Trump's bid to shed Washington's obsolete post-Cold War sludge to master the highest geopolitical risk in over 50 years. Terry joins us now for more. Terry, wonderful note over the weekend, sir, and thanks for giving us some time this morning. I want to talk about the way you think we should be viewing what's developing in Washington, D.C., to move away from the old way of looking at the nation's capital, and you introduce a new way of looking at things. Can you just explain that a little bit more, Terry?
Yeah, of course. I think markets make a mistake generally, and I think a lot of Washington people make a mistake to look at issues in a siloed sort of way, in a binary sort of way. Tariffs or no tariffs. Will Trump do this or that? What Trump is trying to do, I think, in this time out is very much different than the first time out. And to your point about BRICS, I think it all starts with geopolitics. You know, geopolitics is what's driving all of this stuff. And if you think about it, you've got the BRICS statement that just happened. You've got allies in Canada and Mexico already meeting with Trump about a lot of this stuff. And meanwhile, you've got two hot war zones, a third one in the South China Sea that may break out at any minute. You've got Chinese vessels captained by Russians in dragging cables in the Baltic, mysterious drone swarms, all kinds of things like this. But what I would urge people to understand in markets simply is that what Trump is trying to do is trying to transform Washington to deal with the highest geopolitical risk in 50 years, combined with this kind of long twilight struggle with the Chinese in what's termed competition. That's going to take, Trump guesses, that's going to take a massively different sort of Washington. That's what he's driving at.
So, Terry, why go after Canada? We got that question in the last week. If you take a step back from things, what's the objective there?
I think the objective there simply is to say, look, we're interested in making sure our borders are as secure as possible, and we're going to talk with both of the nations with whom we have physical borders about these issues and deal with it. And I think it's not a lot more complicated than that.
Terry, what do you make of Donald Trump's comments around the BRICS and sort of the discussion around having a different alternative currency to the United States, given the fact that they met in Kazakh in Russia, where they couldn't use Visa or MasterCard? They needed to bring either dollars or euros in order to actually transact because none of those other methods of payment even worked. Why would he go after something that doesn't even seem like a realistic threat?
I think, frankly, what this is about Trump telling China. Frankly, I think this is much more about China than it is about the BRICS. We are going to contest you everywhere. And the Trump people judged that was not happening in the current administration. But in the Trump administration, the message to China is, we will contest you everywhere. We will contest you on currency. We'll contest you on Belt and Road. We'll contest you, geopolitically everywhere that we need to do that. And we're not going to miss a trick. And we're going to try to maximize our ability to work hand in glove with our allies. And we are putting the unaligned world on notice as well, that they don't have to choose this minute, but there is a time for choosing at some point. I don't want to make this sound too dramatic, but and the Trump people, I think, aren't particularly subtle about this. But again, I think looking at this through a geopolitical lens provides a frame for which markets and investors can look at a lot of this stuff and gain some clarity about it.
There's this big question about whether markets will essentially provide a check on President-elect Donald Trump as he focuses on rearranging the geopolitical cards. And I just wonder how much that actually is true. In other words, is this a president who actually wants a strong dollar policy and will alter a path if he doesn't get it?
Well, I agree with those who say that the statements, if pursued to their logical ends, provide some contradictory signals. But again, I think that what they're trying to do is trying to reorder things in a way that markets will like. One of the signals that Besson sends that markets like, of course, is on tariffs. Another one is trying to control debt and deficit, and they're trying to make both of those things happen, and that's going to be very, very difficult. But I think, generally speaking, what needs to happen is kind of looking more broadly and then coming down to the more specific. But I don't think you're going to get clarity on dollar policy for a little while to come as you wrestle through both tariffs and the tax bill, for example, just to start.
Terry, just quickly in the 30 seconds we have left with you, do you believe these tariff threats are credible threats that the incoming president would be willing to follow through on?
Look, it's all, markets think it's all about one side or the other. My view is that investors shouldn't shouldn't kid themselves. This was never going to be about all one thing or all the other. I imagine you're going to see some tariffs in on day one. think of them as performative, but think of them as real as well. But I think the bigger action doesn't come till later in the year when you marry this up with the tax bill overall. Trump is not going to want to tank the economy in the first year.
Hey, Terry, good to hear from you, sir. Terry Haynes there of Pangea Policy on a big 2025 just around the corner.
Yeah, and contradictory signals for the market with a whole host of different policies. His point there, Terry's point about the reordering of things, I wonder how much they're already on a path to be reordered. And I ask this especially with the current administration actually levying either further restrictions on Chinese chips, and we're going to talk about that in a bit. But again, how much of a change is this?
We'll talk more about that through the hour. Up next on the programme, Tom Naran of RBC as the Stellantis CEO announces he's stepping down from New York City. This is Bloomberg.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, you know, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, you know, created, when you're solving a problem that's real for you and therefore real for the consumer.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Equity futures right now on the S&P 500, just a little bit softer. We're down here by 0.1%. Recovering, though, and off session lows. We're positive on a Russell by a quarter, following a massive month of gains. for the small caps through November. Lisa, through November, the small caps up by almost 11%.
And this actually is the idea that not only will tax cuts disproportionately benefit the Russell 2000, but that the Trump trade last time around was beneficial to the smaller companies. Key question now is, will this time be different just simply because tariffs might affect them differently? And frankly, yields. Can't forget yields. At what point do the higher yields really cap the potential gains in some of these companies?
Let's get to those bond yields right now, and we can look at them stateside first and then get to Europe, which is where the fireworks have been over the last few weeks. 2-year, 10-year, 30-year, yields bleeding just a little bit higher, up by 4 basis points on a 10-year, 421.29 going into payrolls Friday. The estimate for Friday in our survey so far, the median is about 200K. If you want some fireworks, look to Europe. The euro's weaker against the US dollar. Euro dollar right now at 105.26. Yields in France just about unchanged, anything but unchanged over the last month or so, pushing 3% on a French 10-year, with that government looking fragile.
To me, what's fascinating is that the bond vigilantes are out in full force when it comes to places, even in Europe, in some of the biggest economies, even though they are absolutely somnolent over here in the United States. If there is a threat of a 6% debt to GDP situation in France and an opposition government that wants to pull all the levers and end up with different breaks, basically the bill that they had would have provided certain cuts that were not amenable to Marine Le Pen. So now you end up with a higher deficit and a bond market that's looking to call foul on this. How much does that actually work?
Euro dollar 105.26. And the surveillance this morning, President Biden signing a pardon for his son Hunter. The president justified the move by saying that the case against Hunter was politically tinged and excessive. It's a reversal from his previous stance that he would not use executive powers to aid his oldest living child. Hypocrisy is a word we've all heard repeatedly. I think The Guardian went with heartfelt hypocrisy, which is a rather kind way to put it. What developed just yesterday evening?
This is my shocked face. I don't think that anyone's particularly shocked. People will feign horror at the hypocrisy, and it certainly is hypocritical. And anyone who believes that he was singled out by a Justice Department under Joe Biden to really go after some of the allegations, I don't think there's a lot of momentum on that argument. I will say that last night my kids said, "Would you pardon us if you became president?" And I said, "Please eat your broccoli first, and then we can have that discussion." And then now the real question is, when's he going to pardon Commander?
Commander the dog?
Yes.
What, is that actually a real question, or are you just making light of the situation?
Well, I don't know what else to say.
Okay.
I mean, am I going to feign horror and outrage? Because at a certain point, nobody is particularly surprised. Is it hypocritical? 100%. You've got to question over the legitimacy of some of these allegations and the role of the pardons. And you can have that larger discussion, but I think everyone's just kind of like over it.
I'm not sure what charges Commander is up against, but we'll move on. France's far-right party indicating that it could topple the government as soon as this week. Marine Le Pen and her party threatening to support a no-confidence motion unless Prime Minister Michel Barnier tweaks his 2025 budget. All of this going into a really important ECB meeting over the next week or so. European Central Bank with a choice of 25 versus 50. The politics screaming 50. The data, some might argue, away from inflation, the output data, the latest PMIs in the continent, also screaming 52.
And the irony is that the people who are against it are the Germans, and they actually are the epicenter of the pain, the recession, the auto manufacturing pullback that we continue to see. So there's a real question. Do you get a change in tone from the beacon of austerity in Europe at a time where it seems like anything but is really required? And meanwhile, you have a real change in political leadership. France almost feels like it's experiencing some sort of, I don't want to say a similar or a parallel path as the United States, but it certainly rhymes in terms of the political heft. And you just wonder what kind of market pushback is different than the one that we get in the United States.
Michael Cushman, Morgan Stanley, will be joining us on that story in the next hour or so. Let's finish on this. Tesla and BYD ramping up incentives in China to meet annual sales targets. Tesla offering 5-year 0% loans and a 10,000 yuan discount on its Model Y vehicle until the end of December. BYD offering between 1,000 to 3,000 off some models. We've said repeatedly on this program, one of, if not the most competitive markets on the planet, the Chinese auto market.
And is it because you have an overproduction? Is it because you have a lack of demand because the consumer hasn't been spending? Or is it because simply this is the area, the epicenter of the electric vehicle boom, considering how the resources seem to be in the region? Unclear. But all I know is the race to the bottom seems very real, and it raises the question of actually imported deflation into certain regions that open their doors to Chinese vehicles.
There's a list of companies really struggling in that particular market right now. Stellantis is the one that's having a big struggle worldwide. Shares are falling to their lowest level since July 2022. On news of the CEO, Carlos Tavares is stepping down just 2 months after the CFO's departure. Bloomberg's Ollie Crook joins us now for the latest. Ollie, you've been following this auto market for quite a while. We've been waiting for something like this to happen with Stellantis. We thought that he would fulfill his mandate and be with us at least through 2025. What happened over the weekend?
Yeah, that's right, John. I think what's really sort of interesting is how quickly we went from unanimous support to basically strategic differences, and those strategic differences came to a head on Sunday, and now Carlos Tavares is no more as the head of Stellantis. We've had a sense, John, since the sort of profit warning back in September, I think you guys spoke to him actually just days after that huge shakeup, that this sort of automaker has been staggering forward since that profit warning, right? And days after that profit warning, he got rid of the CFO, he got rid of the COO, he replaced the brand heads for Maserati and Alfa Romeo. All of this, though, potentially not enough. I think that where you sort of get some of the bearishness in the market today is because you get this sense that there is some chaos and this sort of management shift, that this is not really a sort of managed change at the top of Stellantis, when really we had been expecting him to leave at the beginning of 2026. That obviously came a lot faster. And what the next CEO is going to have to inherit, while these sort of German automakers, as you guys have been discussing, have a China problem, Stellantis doesn't really have much of an imprint over in China. What Stellantis has is a U.S. problem. And sort of one of the great criticisms of Tavares, and potentially why the market liked him, is he was very disciplined on cost cuts. Those who are critical of saying that he cut way too much, and that has actually affected the quality of some of these brands, whether it be Jeep, whether it be Ram. They had about 12% market share in the United States at the beginning of last year. That has come down to 8%, and that is what the next CEO is going to have to deal with.
And dealers have been complaining about the lack of models now for quite a while. Ollie, appreciate your time, sir. Ollie Crook there of Bloomberg. Ollie mentioned some of the brands here stateside. Jeep, Ram, Dodge is another one. Look at the brands elsewhere. Fiat, Maserati, Peugeot, Citroën, Vauxhall, Lancia, Opel. The list goes on and on. Tom Naran of RBC joins us now for more. Tom, good morning. Got to start there, haven't you? What do you do with that brand lineup?
Yeah, I think for the longest time, investors as well as shareholders and the management team have been wanting to rationalize this brand setup after the big merger with Peugeot, with FCA. It's just really difficult to do that politically. We think maybe that could be part of the decision of what happened yesterday. It's very difficult for the Agnelli family to go forward with that type of path. That might be what happened.
Do you get the sense that maybe the Agnellis are married to particular brands that they don't want spun off then? And which brands do you think they might be?
Yeah, I think that's probably right. It's probably more on the European side. That's the one that there's the most political opposition to that happening. Italy, obviously France, the UK, there's some opposition there. But in the US, that's potentially an area where we've heard that could happen. That could be where cuts could happen.
So essentially Dodge might go away.
Yeah, that's the one that folks have been looking at, Dodge, potentially some Chrysler. Yeah, definitely that could be where they target.
You raised another point, and this to me has a broader implication for the auto industry. You raised the question that what if the current administration, the current chair of the board, wants to expedite the wind down of a whole bunch of inventories, which has been one of the biggest issues, certainly in North America, and the drags on profitability, and it creates a fire sale for some of the brands that are less loved. That would pressure prices lower across the board. How realistic is that?
I think the first place that they'll target is production cuts. That they've done a good job, actually. They cut about 100,000 units of production in the third quarter. And they've actually reduced the days inventory from like 109 days to 84 days. So there's nothing better than an artificial cause of supply shortages. Just cut your own production. That's probably where they'll start going, and the Agnelli family is very smart. They realize if you cut pricing, if you create a pricing war, that's a bell that you can't unring, you know? So I think they'll start with cutting production, but, you know, if you look at where Jeeps are priced at, if you look at where Rams are priced at, relative to the D3 competition, it's probably unlikely that they can get away without some price cutting. That probably will happen.
One big question throughout this entire earnings cycle has been how much is idiosyncratic and how much is it a broader industry issue? With the auto manufacturers, it's even more so. It's the likes of Stellantis, which has a lot of European brands, but it's the pain point actually in the United States. How much is this execution and how much is this the larger industry trends that have been affecting many other brands as well?
I think it's a combination of both. I mean, Stellantis was definitely notorious for trying to reinvent their brands. And give Tavares some credit. He thought he could reinvent Ram and Jeep as more of a premium brand, right? They're very different than when we were kids. And so that's been a good strategy. The problem is, what you guys pointed out, is how much has been really invested in these brands, the products themselves. If you look at Jeep and Ram, compare them to their direct competition, the D3, over the past, since pre-pandemic, that price inflation has far exceeded that of Ford and GM. So some people hope, at least for the sake of Ford and GM, that this is just coming back down to earth. Maybe it doesn't trickle and impact GM and Ford as much, but I have to believe, especially for Ford, which is more of a direct head-on competitor, think Bronco versus Jeep, et cetera, they're likely to see some pain next year.
This is a terrible time to sell assets. I think we both know that, particularly in the United States and elsewhere as well. They're not the only company having problems. We've heard the dealerships complaining about not having enough brands to sell, enough models of those brands to sell for quite a while. Nissan doesn't have the hybrid offering. I hear that a million times about the United States. There's a real worry about the future of that company at the moment. Who's got it right for you? Who's right there, executing in the moment where we need them to, at the right time?
I think you want to have U.S. exposure. I think you want to be in the sweet spot. GM actually has a pretty good lineup. They dominate that heavy, large SUV category, right? And also, they were rational when it came to pricing. They didn't go nuts, juicing up the pricing of their vehicles over the past 3 or 4 years. So they're well positioned. The other one, I gotta say, is Tesla. They're well positioned on the EV front. They have the best cost structure there. We'll see what happens with the IRA, but maybe California bails them out. Maybe they don't qualify there. But I do think that they do have the best cost structure when it comes to EVs. Next year, you're going to have some affordable vehicles. Pricing is the main pain point. They have like half the market of EVs. And if we do lose the IRA credit in the U.S., maybe that disadvantages other EV makers and benefits them. So it's really, I think, GM and Tesla that actually benefit.
Have they been through winter yet? Have we had the storm? Have we been through the recession? I've been sitting here waiting for the cuts to capacity. I mean, deep, deep cuts to capacity across some of the major European players now for the last 12 months. Have we seen much of that?
I think it could get worse next year, right? You just started seeing, remember those profit warrants from those 4 European OEMs?
Yeah.
Those were massive, like 10% margins dropping to 5%. If that same thing happens, you're at negative. Right? You're losing money on cars for a legacy OEM. So that could be where we go in 2025. And if you were a new CEO at Stellantis, what are you thinking? You're like, maybe I just go all out, kitchen sink, right? Reset the bar, and maybe I lose money, for the first time in a long while.
I think that's the moment we're waiting for, that kitchen sink moment and what that looks like on that morning where you see some really big cuts. And I think we're looking to Europe for that.
Yeah, and until you get that, can you get any kind of revival, and can you even invest in a space that not only is dealing with an overhang of capacity, but also is facing the price wars that we were just talking about over in China, also knocking on the door?
Tom, it's good to see you. Good to catch up. Thank you, sir. Tom Naran there of RBC on the auto market beyond just Stellantis. With an update on stories elsewhere this morning with your Bloomberg brief, here's Danny Berger. Hey, Danny.
Hey, John. President Joe Biden arrived in Cape Verde early this morning as part of the first leg of his visit to Africa. It's his only trip to Africa as president and the first for a sitting U.S. president since 2015. He's scheduled to have a closed meeting with the Cape Verde Prime Minister, who greeted him at the airport before carrying on to Angola later today. President-elect Donald Trump plans to nominate deep state conspiracy theorist Kash Patel as FBI director. Patel is a critic of the Bureau and has threatened to fire its top echelons and shut down the agency's headquarters. His nomination is facing blowback from both sides of the aisle. His appointment is also dependent on the incumbent FBI chief, Christopher Wray, who Trump himself placed in the job in 2017, either being fired or resigning. Elon Musk asked a federal court to block OpenAI from becoming a fully for-profit business, saying the pause is needed to protect his own AI startup and the public. This is not Musk's first legal dispute with the Sam Altman-led company. Musk sued OpenAI in California state court in February, dropped the case in June, and filed a complaint in federal court in August. And that's your brief. John.
Danny, thank you. More from Danny in about 30 minutes' time. Up next on the program, a record-breaking Black Friday.
It's really a shift in the retail landscape altogether. The internet has absolutely changed it. The social media players are also impacting how people discover goods, where they actually shop for goods.
That story up next, live from New York. You're watching Bloomberg Surveillance.
About artificial intelligence. Is artificial intelligence going to enable you and others to say we have enough information to know exactly what something is going to be worth in terms of insuring it or not?
Artificial intelligence is finding its way into our business in a variety of different factors. I think the first piece is getting much better insight into data, which allows us to make better decisions on underwriting. It's also a great opportunity to service business better in terms of like call centers and different ways of what's using robotics and other AI will be very helpful. But it is an emerging practice within the industry and one that is evolving very quickly. So it's also going to present risks that other companies, how they use it and how they use large language models and making sure the decision making is very sound. So it's complicated, but it definitely is benefiting the business today.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world right here on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Coming into Monday at record highs on the S&P 500, pulling back just a touch. We're down 0.1%. Under surveillance this morning, a record-breaking Black Friday.
It's really a shift in the retail landscape altogether. It's widespread. It's because consumers just haven't been shopping as much, particularly in the B and C tier malls. The internet has absolutely changed it. The social media players are also impacting how people discover goods, where they actually shop for goods. And what we're seeing even within e-commerce is a lot of fragmentation, particularly with smaller, lesser known players.
So here's the latest this morning. Black Friday e-commerce sales hitting a record high. Research from Adobe Analytics showing consumers spent $10.8 billion as data from Sensormatic shows in-store traffic falling year over year as consumers pick and choose to find the best possible deals. Joining us now to discuss, Poonam Goel of Bloomberg Intelligence. Poonam, who's getting this right at the moment? Who's winning?
The digital retailers are winning clearly. People are shopping more online. They're favoring convenience. They're favoring value. They're just wanting to sit home and surf the web to find what they need. And the deals are the same, so they can do it.
The dollar players have really suffered, Poonam. We've seen that coming out of the election. They've suffered because they're worried about tariffs. Once you get past all of this shopping over the next several weeks, they've got to confront January 15th, what happens with tariffs and what happens also with that agreement with the ports. So tariffs January 20th, ports January 15th, two very key dates for these retailers, Poonam. How are they managing inventory going into that next month when that big tariff hurdle might actually hit them after January 20th?
So some retailers have started planning by ordering more inventory ahead of it. That's a tricky situation because we don't know what the magnitude of the increase, if any, what it could be. And we don't want to get into an inventory hiccup where you have too much and you're having to mark things down. So I think it'll be challenging regardless of what happens. It really depends on the magnitude of the increase. Will it be up to 60% in China, or will it be another 10%? I think that really will dictate the magnitude of the impact to both the retailers and the consumers.
Poonam, are you seeing an increasing divide based on size of retailers in terms of the heft of negotiating some sort of efficiencies of scale when it comes to the likes of tariffs, as well as an online presence that seems to be really attracting the gravitational force?
Absolutely. Look, if you have scale, if you're an Amazon, if you're a Walmart, you clearly have that to your advantage, right? Because your volumes matter to where they're being produced and you can negotiate better prices. That said, if we see tariffs go up to as high as they were proposed during the campaign, 60%, which we don't, no one can escape that.
Okay, but putting tariffs aside for a second, there's a question just generally about how much you have seen the entire retail industry really transform over the past 5 years. You've seen an increasing share taken by e-commerce. There's a different type of in-store experience. I'm just wondering about what this looks like going forward at a time where it's getting more expensive for smaller players to keep up with the larger ones, with returns, with free shipping, with all of the other perks that Amazon and Walmart have made us all spoiled by.
Sure. So we estimate right now the retail sales online are 25% of total retail. It's going up to 33% in the next 6-7 years. So still clearly greater share in the online vertical. In terms of smaller retailers, you know, it's actually easier for them to be online today. With platforms like Shopify, they have the ability with no barriers of entry to sell stuff online. Yes, returns are a growing issue, but that's a small piece of the puzzle that exists for not just the small retailers, but also the big retailers. But overall, I think it's very easy to sell online today than it was a decade ago.
But Lisa's been talking about this for weeks, months, if not all year. Where does this leave Amazon? As Walmart really starts to execute, how much does this squeeze the likes of Amazon, which for a while in this country was just the sole winner online?
I think Amazon still stands out. It's clearly the lion's share of online sales. When you think about Walmart's share and Amazon's share, you're talking about one company that's at $100 billion in GMV online, which is Walmart. And then you're talking about Amazon, which controls about $700 billion in global GMV. So they're still very, very different. And Amazon leads in the discretionary aisle versus Walmart leads in the staples consumables aisle.
Do you see that mix changing at any point in the future?
I think it could, but it'll take time. It's not going to happen within the next 12 months in a drastic way. But yes, over 5 to 10 years, sure. But then there'll be two really different companies too, right? With Amazon really gaining steam in advertising, in media, and in its cloud business. So it's a different entity altogether when you look at them side by side. But on the retail front, you're absolutely right. The lines are blurring, and Amazon does have growing competition, but it's not just Walmart. It's also Temu, it's also Shein, right? These low discount players that have really climbed up the ladder very quickly.
So what are you watching, Poonam, heading into next year? Yes, tariffs are going to be a big issue, but you are seeing this ongoing transformation. We've seen this with Target with respect to what value means at a time where it's not just price, and the behemoths kind of going to war with one another.
I think the value focus will exist in 2025 like it has never before. People are focused on value. We saw it on Black Friday as well. And I do think that the larger players have an advantage because they have scale, so they're able to push the pedal on price further and more quickly. So value stays. I think experiences and preferences for what you want, where it is, also matters. So if you have the right product, if you have the right innovation, you're going to drive the customer interest. And everything else in between will suffer as it has been for the last 5 years.
Poonam, can we just put to rest this idea that people actually enjoy waking up at 6 a.m. and fighting crowds and the day after Thanksgiving to go shopping? Is that basically what we're learning with the actual foot traffic going down pretty significantly?
I think so. I think the lines are blurring because people are finding the same deals online. Unless you're going in for that free $10 gift card at 6 a.m. when the store opens, there's really no reason to be at the store at 6 a.m. anymore.
Agreed. We're finished with it. Put out thank you. Put out call of Bloomberg Intelligence. Put out thank you and a happy Thanksgiving, a belated happy Thanksgiving. There just isn't that product anymore. Isn't that product that you'd wake up that early for anymore? There's no lines queuing outside of an Apple store for a new iPhone. Those days are gone.
Yeah.
They're very, very short. Haven't we moved on from all this?
Well, yeah, because Black Friday starts, the Monday before, and then it goes until the Monday after. So essentially, why wait in line? But also, aren't we glad about this? Isn't this sort of an evolutionary advantage not to have people that are trampling each other? And yes, we're showing a picture of a line. It's